to be valued like Meta. Right now, their valuation on a forward price to sales is higher than Meta, and Meta is the gold standard.
All right, so it's up about 60%. We're now about $53 a share. That 8% of Reddit users who are allowed to buy, I forget, do they have any lockup or they don't?
It's just buying an IPO. Yeah.
So would we? How does that impact potentially trade today or going forward?
It's so mixed, Carol. I've talked to people who look at your retail traders and think, oh, they're just going to sell at day one and lock in the gains,
That's
which
what I was wondering.
would make sense. But the flip side of that argument is if you're a moderator and you really care about Reddit and you believe in it, and also the fact that maybe you're working right now and not checking your E-Trade account. So maybe you're going to see how you did tomorrow.
Right.
So it's really just kind of an unknown question. I'm more interested in seeing in the days and weeks when options are available for trading, how Reddit attacks that. Are we going to see them trading short or put options, which bet against the stock, or some of those call options that can drive shares higher?
Hey, Ed, Bailey's planning his honeymoon on Reddit. I'm using it for home improvement, trying to fix the HVAC in our place. How does Reddit continue to attract more people if this is a company that's been around for almost as long as Facebook and still is just a fraction?
Gosh, I mean, this goes back to my point on doing an IPO. That's what's astonishing, that here on Bloomberg, we talk a lot about Reddit in more recent history because of the phenomenon of the meme stock frenzy. And Reddit was where the discussion was happening, the herd mentality. I think hive mentality is what Bailey said. But outside of our world, it's actually not that well known. You know, people, exactly as you point out, Tim, think it's kind of like Wikipedia. And
you
so
know what,
big question.
Ed, I want to jump in here. And Carol, so just a little behind the scenes here. Carol and I we were getting our makeup done a little earlier. We were in the makeup chairs, and we were talking to the folks in the makeup room about Reddit. And the two people who were talking to me were saying, basically, Reddit, that's a cesspool. There's some crazy stuff on Reddit. And what is so interesting, and I think there's this perception still, even though the human moderation has improved so much in recent years, Ed, there's still this perception that it could be the worst of the internet.
Well, I'll just reflect on my own experience of being the subject of discussion on Reddit. You know, you guys remember in 2020 when I broke the story about Nikola founder Trevor Milton having made up, basically, the truck behind him. And a lot of that did play out on Reddit. But in particular, one of the points of discussion is whether or not Trevor was going to go through with his threat to sue me. You will remember he very publicly said, I'm going to sue Ed Ludlow and Bloomberg. But that conversation kept going on. But the point of it is going back to the moderation, that there are more codified rules on the Reddit forum, and those rules are enacted and policed by the moderators who are not paid by Reddit. And that is the counter-argument that Reddit would make. That's the kind of safety team that they have. You think about Meta and as an example, all of the people, hundreds of them that it employs from a safety standpoint, they just function slightly differently. But there is that perception. Don't get me wrong. There is absolutely that perception. I would just very quickly go to its history. You know, 2006, almost a year after it was founded, they sold the thing to Condé Nast.
Right.
And Condé Nast eventually spun it out. And it was kind of in the wilderness after that. You know, several interim CEOs who were trying to work out how it would be scaled. And now Steve Huffman's back at the helm, one of the original founders. And it's a really good question for him. How does Reddit become mainstream, if they want it to at all? And
some well-known CEOs popping into the C-suite at this company. It's been fascinating. Hey, Ed, we want to add into the conversation, of course, our thanks to Bailey Lipschultz of Bloomberg News, but we do want to add into our conversation as we watch shares of Reddit. They're up about 64%, trading right now at $53, $54 a share. The trade is pretty fast and furious. Right now, Bloomberg Intelligence Senior Tech Industry Analyst Mandeep Singh joining us in studio, along with Bloomberg News Equity Capital Markets reporter Amy Orr, who follows the IPO market. Mandeep, I do want to start with you because I do feel like we are constantly trying to drill down about what is the business story for this company forward. You understand the social space. How are you looking at Reddit?
I mean, we know the old adage, content is king. In this case, they have the user-generated content that Google search is using. All the large language models that are training are using. And look, there are very few things that Google wants from other companies. One is the NVIDIA chips, and the other one being Reddit's corpus. And that just tells you what they have is something unique. Obviously, the company doesn't monetize very well. That's why the ad-related revenue doesn't stack up very well against the likes of Meta. But at the end of the day, the bull case is driven around the content and the engagement that they have, and that's very powerful.
We just want to say that $54 a share, it's just below it right now, but gives it a valuation of about $10.1 billion on a fully diluted basis. So there you go.
Hey, I want to bring in Amy Orr, who covers the IPO market here. Busy week for you, Amy, I should say, finally.
I know.
What's that?
Finally,
yeah.
Finally, a busy week, and hopefully the day will end good.
Well, so
It's a good
Astera shares popping yesterday on.
point. It's still going strong.
It's still going strong today. Point that Carol made a little earlier. We're seeing shares of Reddit now higher by 64%. Is the IPO market back?
Well, that's what we're trying to get people to say, and hopefully, by the end of the day, if Reddit actually holds, this would give a lot of people a good kind of feeling. Essentially, at the end of the day, Astera doing well is kind of expected already, but Reddit is kind of on shaky grounds, mostly because there is 8% going to retailers and Redditors. And then history showed us that it hasn't done very well to other people. Deliveroo, Facebook, before it became Meta. So these are the wild cards that we're not even sure. That's also the reason why I'm saying, like, if it holds until the end of the day. So hopefully, if it holds, then this will give a lot of people confidence in bringing forward. There's a long pipeline of companies that's been waiting as long as Reddit since 2021. So a lot of people are seeing that. And if we put in a spectrum of things, right, Astera Labs has a lot of tailwinds on its side. And then Reddit has a bit of a hairy kind of, deal. So if both of them can do well, anything in between can go.
Ed, come on in on this. Yeah.
Yeah, I just want to commend Amy and the team as well. Ryan Gould, Katie Roof. The deals team has just been incredible because you forget, like, there's a listing day, but it's a very fluid process. I just want to point out, like, Reddit's very exciting. I'm so glad to be on the show with you guys. But in the context of history of technology IPOs, it's actually not very big, right? Go back to the 90s, it's like number 480 in terms of dollar raised. But this is also important for the banks, right, Amy? And your pulse on the street is fantastic. So just explain the dynamics of how this came about.
So right now, in terms of IPOs, so far this year, it's actually been doing pretty well. We've got 8 billion or so IPOs that's been priced, and it's already done so much better than last year. I think last year was 1.8 or so, nearly 2 billion over this period of time last year. So we're already doing much better. But if we pull back and look at the grand scheme of things for the whole equity capital markets, we've seen much stronger activities in the follow-ons and in convertible issuance. So it's IPO revenue is only like a tenth of it so far, which is not great.
This is what makes me think when we talk about, the market's not the economy's not the market. An IPO is not a business is not necessarily what you get in an IPO. So Mandeep, come in like as someone who looks fundamentally at companies, their balance sheets and so on and so forth, how do you think about the investor interest in this and what it means potentially for the business, if anything at all?
Yeah, I mean, look, this company
It does give it money.
hasn't generated any profit for the 18 years it's been in existence. But
18 years.
Yes, and I think the way I look at it, it's more around their gross margin. So a company with 86% gross margin, that's your typical internet company. Yes, they have a bloated cost structure, 55% R&D intensity, 30% sales and marketing intensity, and they have not much to show in terms of incremental products that they have launched over the last 2-3 years. So you could question, is it really run very well in terms of monetizing their engagement and then the cost structure aspect of it? Probably not.
Right.
And that's where, as a public company, I think they'll be forced to improve their act in terms of showing more profitability. I don't think there is scare in terms of cash burn or them running out of money. They've got a perfectly fine balance sheet. But now it's all about showing monetization. And the LLM, the generative AI aspect is huge. If they are able to sign up a $200 million deal with Google for 3 years, I bet you other companies that are training their own LLMs will sign similar deals.
I actually wanted to say, so it's very interesting because they're saying it's not only Google, big companies like Google, that has the AI kind of need to train their AI models, but it's also smaller companies, news agencies, financial institutions, anyone who wants to actually look at like trends and social networks. So essentially, those companies will also pay, and those might not be as big, but essentially a new revenue
But it's
stream.
a lot. If it's a lot of small
Can
companies,
be.
can be.
And the
right.
company has been guiding investors for a 20% growth, like for the next few years, and hoping for 30 to 40% in the medium to long term.
Yeah, my simple lens when I look at, internet company multiples is if you are paying 8 times sales for a Meta that's also growing 20% sales, why would you not pay 8 times sales for a company that's $1 billion run rate and is also expected to grow 20 to 25%? So I think there was that arbitrage, which obviously they have closed with the opening we've seen with Reddit.
Hey, I want to bring back in Ed Ludlow because he spoke about this a little earlier with Reddit COO Jen Wong. Ed, what makes Reddit's data better than, let's say, X's data or Instagram's data or data from Bloomberg News? If Bloomberg News, for example, were to partner with a company to train their AI.
Yeah.
Yeah, I think the answer from Reddit, and in particular Jen Wong, is that think about how the Reddit platform works. Each of the forums are topic-specific and concentrated, and they're backed against rules. So if you kind of like are talking about Bailey's honeymoon or Tim's DIY project, and then I jump in and say, hey, do you guys want to talk about the new car I'm buying? You'll get ejected because that's not what the topic's about. And so it's just highly relevant and condensed data. But the main point that Jen Wong made that I want to kind of understand better is that the data is also contemporaneous. It's in real time. One of the things that we reflect on with prior generations of GPT from OpenAI or even Grok is that the data at some point becomes stale, and we assess the performance of a large language model through our interaction of a generative AI tool based on how contemporaneous the answer is. So if you go into the base version of ChatGPT and you ask it about me, it has some slightly outdated answers on who I am and what I'm doing on. But that's because the data it was trained on reflects me in 2021, 22, something like that.
Hey, listen, we want to feature a little bit of that interview you did earlier, Ed Ludlow,
Sure.
with the Reddit COO, Jen Wong. Here's what she had to say, guys, about data specifically.
The Reddit's corpus of data is incredibly valuable, and it gets more valuable because as there's more content that's generated maybe by AI or computers, original human thoughts and ideas increase in value, right? If you think about it, a new car comes out. Who's going to review it? A real-life family of 6 can actually tell you what it's like to drive that car. That's always going to be valuable. And so, whether that shows up in data licensing or in the products that Reddit builds, it is valuable.
All right, everybody. Of course, that's COO Jen Wong, of course, of Reddit there. But it does say something, right, Ed, for how long we've talked about when it comes to data, messy data dumps, right? That isn't used, a lot of it, but it's not necessarily useful. And so that's the power of Reddit, potentially.
Yeah, I think, just extrapolating on her car analogy, I think the point that Reddit's making is not yet proven, though, that go with the new car example, a new EV comes out. They're arguing that if there's going to be a condensed and concentrated conversation about that EV, it will all be in one place on Reddit. Well, the counter argument to that is, well, hold on, only 71 million people use Reddit. 2/3 of the world's internet-connected population is on a Facebook or a Meta platform, So it still leaves the question, well, Jen, how are you going to add that family of 6 to Reddit if they're not already on Reddit? Yeah. And I don't have a good answer to that.
Did she give you a good answer to that? She didn't give you a good answer to that. Yeah.
No, I think that the idea is that, we haven't really talked about what Reddit will use this money for, and perhaps I should have asked about it more specifically. Mandeep raised the strength of the balance sheet. I think they're going to have to spend on marketing. Get their name out. I don't know what Mandeep thinks of that, but I basically go back to what we discussed. Outside of this kind of tech bubble and financial markets memes and Bloomberg, who really knows what Reddit is?
You make a really good point, especially as it struggled with its identity over the last 18 years, Ed. Hey, Mandeep, I do want to pose that question to you about potentially using some of this money to market. Is there a track record of success when it comes to building users on social media platforms using marketing? Isn't it just much more organic growth?
I think so, especially with Reddit, they do have a brand, and a fairly good brand that they can drive a lot of organic traffic. I don't think Reddit needs to spend their marketing dollars in acquiring new users. It's more about, how do they drive more daily active users? So one of the metrics that people look at is daily active users to monthly active users. And in the case of Reddit, the ratio is really low, 15%. For a typical social media network like a Meta or a Snap, it's over 50%. And so that's where, that engagement, getting those daily active users in. And look, Google is already doing that. A lot of the Google search results show Reddit results, and they show ads next to it. So Google is monetizing Reddit better than Reddit themselves.
And to be fair, that's probably how I became part of Reddit, was asking questions to Google and then seeing that oftentimes the answers would come up on Reddit.
So
you make a
ideally
really good
it should
point.
be a Reddit daily active user that should be looking at that results, but Google is showing a lot of those results online.
Hey everybody, I just want to do a quick check on shares of Reddit. They are open, they are trading, and the stock is up just shy of 60%. At its highs today, was trading above almost $58 a share, so a 70% pop on this first day of trading. It's settled in, or it's not settling in. We still have some ways to go, but right now up about 59%, $54 and change here, if you will. So jumping after we know it priced at the top of its marketed range. And this is coming day two. We've had two big tech IPOs that have all come out of the gate incredibly strong. And we know Astera, right, the semiconductor related company, it's also trading higher in a second day of trade.
So that brings me to Amy Orr, who covers IPOs here at Bloomberg. She's in our studio right now. Amy, if you're maybe one of the bankers or perhaps working at Reddit, and you see a 60% pop on day one of trading, how are you feeling? I mean, it's good, obviously, if you're a shareholder, but are you also thinking, wait, we could have raised more than $700 million in the IPO?
So I just want to go back to the marketing bit. I have to say, Reddit is not raising all the money. So the money that it will probably get is around 550 million or so, because it's also some of the employees are selling. But also, this is the biggest marketing event. So they don't really have to go out. So essentially, for a lot of people, there's been concern about there is a generation of Redditors, and then the younger people do not know it because the younger people are already into TikTok and other things. But this is going to introduce a lot more people to TikTok.
Because of the IPO?
Because of the IPO. But going to bankers, or just issuers in general, so normally people will feel left out, right, leaving money on the table. But we're in a totally not normal IPO environment right now. So anything up and having a pop to investors is great for everybody.
Well, that's what I was wondering. How much of it is like, oh my God, there's another IPO finally, versus, wow, I really like this company?
Well, it really depends on investors. And I have to say the market is very concentrated in tech at the moment, not on individuals, like individual other sectors like industrial, healthcare. Like we haven't actually seen those rebounded to the point where we've seen a whole slew of IPOs in those sectors as well. So it's really up to investors to decide for themselves whether they like it because the momentum is there or because the fundamentals are there. So at the end of the day, IPOs are buying into growth.
Right.
And growth is really about projection and whether you actually believe in the company. So everyone has different kind of viewpoint about that, right?
And I have to say that you throw AI kind of in the AI play in the data, like that certainly makes it a little bit more of an interesting story, Tim.
Hey, it certainly does. Mandeep, when you think about comps for this company, what's a fair comp?
Well, Snap, Pinterest, and Meta, I said, the fact that Meta is trading at such a premium to the smaller social media players, I thought that was something that
How is this trading
justified.
against Pinterest, for example?
So Pinterest trades, for example, at about 4 times EV to sales. Meta is close to 8 times EV to sales, and Reddit was priced right in the middle there, $34 equated to 6 times EV to sales. So that's why I think the pop gets
now
set
at
closer.
$52 a share, a little higher than that.
Yeah, and which is why you pay for growth, and I think with Reddit accelerating growth in the past 6 months, it just makes a strong case that they should be at a premium multiple.
I just want to remind everybody who's watching and listening around the Bloomberg universe that Reddit shares, they are definitely up in trading. Stocks up about almost 55% here in its first day of trade, trading above $52 a share. It is the 4th largest this year. The biggest of those listings, though, that we've seen so far was the Immerse Sports one that we had in January. Ed, I want to go back to you because there you are in the heart of Silicon Valley, Reddit, a company well known in the Valley, been around for a long time. Has there been been much buzz in conversations around this company? Like, wow, this could be like Reddit's time. I'm just curious what the conversations, if they've even been happening.
Yes, specifically last night, Sequoia, which is one of the biggest venture capital firms, held a really big AI event called AI Ascent, and they were talking about Reddit there. They had like 100 CEOs and founders from the biggest AI companies all in one room. But again, they went back to the point of the data licensing, and just like Mandeep said, and Mandeep, I'm paraphrasing, but I think you would be happy that I'm quoting you. You know, Mandeep says, I bet you that Reddit will go to the other LLM builders, big and small, and do a deal. And I think that's the conversation that a lot of the kind of tech world is having out here, that, wow, Reddit's kind of got its story straight and got it right. And if they can do 200 million with Google, they'll probably be able to replicate that. And then the other part of it is I would just go back to, like, Reddit is a part of this town. You know, it was a Y Combinator startup in 2005. That's a very well-known incubator here in the city. It sold in 2006 to Condé Nast, and it's kind of had this kind of strange and long journey, but it's still been a name in the world of technology that we talked about. Katie Greifeld should be here. She would back me up on this. But long before Wall Street bets and the meme stock frenzy, we did know about Reddit to some extent, right? So while I've been saying that the kind of global audience for Reddit might not be there yet, it is well known to those in the technology community, at least.
Yeah, at the same time, Ed, it is on a fully diluted basis, a valuation right now just shy of $10 billion.
Yes, just shy.
Just shy, but in terms of market cap, right now about $8.2 billion. Talk to me a little bit about what happened a few years ago when they raised money at a $10 billion valuation, because we're still not, we're still just around that point 2 or 3 years later.
So in 2021, in the last private round that they did, they had a $10 billion valuation. So they're not quite there yet. The cap table was probably quite complicated. And I guess that you could ask yourself, well, are there people on that cap table who are either in or out of the money? But I think we talked about this a bit earlier, that if you think about the last 3 or 4 years, there are a number of companies that are now public that chose to do down rounds. In other words, raise money at a lower valuation than the valuation of their previous round. And they did that to give themselves some upside, right? Imagine if Reddit had retained that value we're now valuing it at 5 billion or even higher, 15 billion, but Reddit didn't have to go through that process. It's just the reality of the time and place that you're in. And, Amy will know the history of this, but, Reddit was going to do this in 2021, and then it was going to do it in 2022, and we've kind of been waiting a long time. And 2021 was this massive US IPO year, particularly for tech, where they kind of missed the boat. So there is a part of it that's just confidence and timing, but the valuation is comparable right in this moment to where it was in that last private round.
I have to say that actually it's very funny, Ed. You mentioned the last funding round.
I'm a funny guy.
Because in the prospectus, for Series E and Series F, where Tencent, Condé Nast, and Sam Altman actually participated, we were thinking
of all the people, right?
Yeah, for the price range of $31 to $34, they're going to make a loss because the average price was $37 or $42. So at $50 right now, so they're all making money, even the people who participated in the last round at a valuation of $10 billion.
Pretty remarkable, right?
It really is. Okay, Mandeep, if you're doing ad sales for Reddit, how do you go out there and convince a large marketer to spend money with you versus with meta platforms, which would tell you, hey, we know exactly who the next buyer of your product is going to be?
Yeah, one of the trends that we are noticing with LLMs is the ad targeting will get better and better. And you've seen that with Meta's latest results.
You said LLMs.
Yes,
okay.
Because what LLMs give you is more personalized.
LLMs remind us?
Large language models.
Thank you.
And that's what Meta has, their own large language model called Llama. I mean, others are standardizing on GPT, and Gemini will probably show up in Apple. But the point being that you will see an expansion in search because of LLMs. So not only do you ask a query, you can ask a follow-up. And when you ask a follow-up, you give more information to the channel you're asking the query, whether it's a chatbot or Reddit or any Google search. And with a follow-up, you have the proposition of showing even more targeted ad. So Reddit has that engagement in terms of the user base looking for user-generated content where all that is original to Reddit. And if they can build a search platform, the ad targeting can be huge, much better than any other platform.
I just gotta say, I'm curious as Reddit users start to hear that. It just seems like if I was a Reddit user, I'm not, but it seems like it's a platform where they wouldn't love that. They think it's kind of their own little space that they go into. So I wonder if there's pushback going forward. Just to reset everybody, Reddit shares up in trading. They're now below $50 a share. So we've seen certainly a lot of volume, a lot of activity. Stock still up 45% in its first day of trading, the Reddit IPO. So again, 49 and change. With us, Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV, who spoke with the Reddit COO earlier today. Amy Orr in the house, equity capital markets reporter at Bloomberg News. And Mandeep Singh also with us in studio, senior tech industry analyst at Bloomberg Intelligence. Tim, we want to add another name to this roundtable.
Yeah, because we have with us the person who wrote the book about Reddit that came out back in 2018. Back with us is Christine Lagorio-Chafkin, editor-at-large at Inc. magazine, also the author of We Are the Nerds, The Birth and Tumultuous Life of Reddit, the Internet's Culture Laboratory. Christine, by the way, we should note, if her last name sounds familiar, it's because she's the wife of Bloomberg Businessweek's Max Chafkin. She was at the New York Stock Exchange a little earlier today, right now joining us from her office in New York City. Christine, welcome back to Bloomberg Businessweek. A day like today, after writing a book about the history of Reddit, what is Reddit today versus Reddit in its early years?
Wow, yeah, it's a very, very different company, right? I mean, you're talking about the viability of selling advertising. You're talking about selling, two large language learning models and selling their basically AI companies being a big customer. That was unheard of 10 years ago. It was also unheard of for Reddit to really be a mainstream news source 10 years ago. It was really a kind of dark corner of the internet at that point, with a lot of pornography, a lot of hate speech, and it's been a remarkable journey that it's been through to kind of clean up that, make its content moderation modern, and it's become sort of a model for that.
Well, and it's come a long way, it sounds. Take us to the exchange earlier today. You were down there. Tell us about Stuff Snoo and what else the activity was at the New York Stock Exchange as it got ready to make its debut.
You know, I walked into the lobby of the stock exchange, and there's just a stuffed Snoo, which is a little round alien that is the company's avatar or mascot. And I saw a security guard sort of coo at it, which was very cute. But then ringing the bell on the floor at 9:30 a.m. was not CEO Steve Huffman. It was a human, I assume, in a large stuffed Snoo suit, which I think, was sort of meant to stand for every man.
Not a dark place anymore, huh?
Yeah, it was very cute, I mean, so I think they're trying to appeal to their core audience as well as investors, right? They need to keep their users happy at the same time as they've gained a lot more shareholders.
Hey, talk to us a little bit about that balance, Christine, because, it's not necessarily, Reddit's not necessarily a place, look, there's a niche for everything on Reddit, I think it's fair to say. But the attitude of the users is not certainly one of 100% supportive of this company going this route. So how does Reddit walk that line and keep that balance?
Yeah, no, absolutely. Users are quite skeptical. There are, hundreds, thousands of posts on the site from users expressing skepticism. What happens when Reddit needs to make more money? Does it start charging us? Does it start, does the selling of the content start to become something that inhibits more speech on the site? There's a lot of skepticism, and it is very important for Steve Huffman and the other executives at Reddit to listen to those sentiments and keep users happy. He did say in an almost AMA earlier this week that he does listen to users, and that site revolts such as the one that happened last summer are very valuable to him, and are a learning opportunity, because the users are the bread and butter. They need to keep growing those users to keep growing those advertising money. Advertising is still their primary, and they said in the S1 they're really only way of making money right now. So it's very, very important. He really wants to get over 1 billion users, and they need to keep the site very, very friendly and growing, and avoid those sort of user revolts in the future.
Well, that's what I was trying to get to earlier with Ed Ludlow. I want to go back to you. We're listening to Christine, but this whole idea of kind of what this site has been like, and I know they've cleaned up some stuff, but I do wonder, like, what is that balance of bringing in advertisers? Mandeep earlier talked about their already bloated cost structure, that they maybe need to work on that, but also they need to raise their user base. I mean, there's a lot of things that they're going to be juggling now as a publicly held company.
The Nerds was published 2018, I think I'm right in saying, but that's like a really interesting year because that was the year that Jen Wong joined, right? And I'm sorry to keep going back to her. It's not just that I interviewed her earlier, but like I think a lot of people would credit Jen Wong with operationalizing Reddit and making it into a proper business. And by the way, she's like a really significant shareholder, more than 2 million of the shares outstanding, more than Steve Huffman as it stands, because he has a complicated comp package. And I just wondered if you could reflect on what you think the tipping point was in Reddit growing up as a company a little bit, because it was so influenced by the community, right? You know, the moderators moderate.
Christine, come on in on that. Yeah.
Yeah, I do. I mean, I do think that there was this really interesting moment when, do you remember back when Ellen Pao was briefly CEO?
Yeah.
And
She was interim though, right? That was on an interim basis.
I think that everyone intended for it to last, and she, literally got harassed out of the role by users. But what she did, this very important thing, is she basically isolated and started to cut off 5 different communities that were just full of hate speech on Reddit. And it was super controversial at the time, and it has since, over the past decade, become a thing that Reddit does all of the time. You know, Reddit now has a whole set of rules and a whole different structure of moderators that was influenced by that very first step that, back then researchers found that just eliminating those 5 communities had a really interesting trickle down and it slowed hate speech throughout the entire site. I mean, that was, I think, this turning point. I think hiring a more advanced sales force, hiring Jen were also very important, steps for the company. But it's still, it's still a work in progress. And any site that relies on a community of unpaid moderators, like Reddit does, it's going to always be a battle, right? Reddit only has, some 1,000 employees.
Hey, listen, everybody, just a quick check. Our roundtable discussion will continue in a moment, but Reddit shares still up about 46% here in the session. At their highs, they were almost $58 a share. That was a 70% gain on its first day of trading. Still up, as I said, 46%. The stock trading, forgive me, just under $50 a share. So still quite a pop. Amy Orr is still with us here at Bloomberg News, watches the IPO market. I mean, safe to say we still have, a couple of hours to go before we wrap up this trading day, but right now it looks like a pretty successful IPO.
Looks like it, and I'm sure that a lot of bankers are really happy about it, because given that over the weekend the message was kind of like confusing, because it was 4 to 5 times book. When people were seeing like 4 to 5 times book, it was not a good book just generally. And there was talk about like now coming into the beginning of the week, and then especially just before pricing, the book cover was more than 13 times cover. So essentially there's a great ramp up, and especially from long only funds, and that's why, it's been holding up pretty well.
You see the momentum. All right, as we said, we're talking with Christine Lagorio-Chafkin, wrote a book about Reddit. We Are the Nerds, The Birth and Tumultuous Life of Reddit, the Internet's Culture Laboratory. Also still with us is our own Ed Ludlow, co-host of Bloomberg Technology, and Amy Orr, who watches the IPO market here at Bloomberg. Christine, I want to go back to you. As you think about this company, they're coming public in a market where there's some really big players out there, and I get the AI data play, and that could be a lot of potential for them. But what do you see as their biggest challenges going forward, having done this deep dive in your book into the company and into its history?
Yeah, I think this transition into AI is going to be challenging, both as a perception and in reality, in a sales reality. But let me just say that Steve told me, I did speak to Steve earlier today as well, and he told me something really interesting, which was that, this long road that they've had to IPO. They filed first in 2021.
You're talking about Steve Huffman, the CEO of the company.
Yeah, I
go
spoke
ahead.
to Steve Huffman earlier this morning, and he said basically they've been doing earnings calls since then. They did 5 different rounds of meetings with investors before they even did their roadshow. So by the time they got to the roadshow, he said everyone sort of knew the business so well and didn't have as many questions as he expected. Which if you know Reddit, Reddit requires some explanation. So I thought that was a kind of interesting detail. But I think the AI thing is very interesting and it's a challenge. But it's also, as AI starts to shift the internet and the way we interact with search, I have been noticing more of my peers are searching, say, Google with the word reddit.com in it so that they get a real human response to their query instead of getting an AI generated response.
Oh, that's
so
interesting.
I think we can stand to benefit from the growth of AI, not just from a Salesforce angle.
Because you're arguing, Christine, that we could be desiring something that is more human in a world that is dominated increasingly by answers generated by AI?
Yeah, absolutely.
Okay, so let's talk a little more, because Ed Ludlow spoke earlier to Jen Wong, the COO of Reddit, all about the way that Reddit could use AI as a business model in terms of using its content to train AI models. Christine, was that even in the research that you did for your book, which again was published in 2018, was that even on the radar of folks at Reddit back then?
AI, gosh, I do not think it's nothing that I talked with them about. I do have to say. At that time, Sam Altman was still on the board of Reddit, but he had founded ChatGPT, but he was not in the press about it yet, and it was not working on it full time yet. So no, it's something we really discussed.
All right, guys, just got about a minute and a half left here. I want to go round robin as we get ready to just wrap up this hour here. Amy, or watching this IPO, 30 seconds here on what you're thinking.
I think Reddit went public at the right time for the company. It might have took it 18 years for it, but then it became profitable in the fourth quarter, and that gave investors a lot of confidence.
What do they always say? It's always about timing, right place, right time. Ed Ludlow, what are you thinking? We're going to continue, obviously, the coverage here on Reddit and broaden out here, but what are you thinking here? You've been following this one very closely.
Yeah, for the last 6 months to 2 years, everyone has an AI story, and I just feel like Reddit got their AI story right and at the right time, and it answered a lot of questions and concerns that people had about the legacy advertising. I call it legacy, it's pretty much brand new, but advertising business. And so let's see where they trade in a year's time. That's the fun of the markets.
That's
Hey,
so true.
Christine, just last 30 seconds to you. The book is called We Are the Nerds, The Birth and Tumultuous Life of Reddit, the Internet's Culture Laboratory. Where are we in Reddit's life now?
Yeah, we are entering a new chapter of Reddit's life. Steve Huffman this morning told me he's very excited to and honored to be a public company now. He said that, looking back to other great public companies, you don't even remember their time as a private company. The iPhone was not made by a private company. And so he's excited for the next chapter. I think that there's a lot to watch in terms of this stock too. Watch to see if anyone takes out money.
Right.
Watch to see who who's buying. Their AI message was at the right time and is going to be an interesting component to watch.
Got to wrap. Thank you so much, Amy Orr, Ed Ludlow, and Christine Lagorio-Chafkin. Thank you so much. Shares of Reddit, folks, up 50%. Stock closing above $50 a share. Carol Master, Tim Stenovic. More on Reddit. This is Bloomberg.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
A very good afternoon, everybody. Bloomberg Business Week continuing on this Thursday. We're just about 2 hours away from the closing bell on this Thursday. Carol Massar along with Tim Stenivek. And gotta say, the setup, big tech once again dominating our headlines. I'm watching shares of Reddit. They're up almost 48%, $50.14 a share. So quite a pop in its first day of trading. But for Apple, another name on our radar, Tim, it's going in the other direction.
Yeah, shares down right now by about 4.2%. This because the Justice Department has sued Apple in an antitrust case over the iPhone. As I mentioned, the stock's selling off on the news. We're going to have the latest and what the implications could be for Apple in just a moment.
All right, so big tech certainly on our radar on this Thursday. Plus, we're going to get into the dismantling of a 131-year-old iconic company, American giant. That's the past. We've got the inside story of General Electric.
And it's episode 4 of The Deal with Alex Rodriguez and Jason Kelly. That's dropping a little bit later, and it features none other than Yankees Hall of Famer Derek Jeter.
Yeah, those two buddies.
Yeah, maybe now.
Definitely know each other.
They know each other, let's just say that.
All right, let's get a check on the trade. We've got equities near their worst levels of the session, but they are green across the board. Let's head on over to Charlie Pellet with a check on the trade and your top business stories. Hey, Charlie.
Hi, thank you very much, Carol and Tim. Indeed, 3 major stories today. The market response the day after the Fed, the Justice Department sues Apple, and yes, the Reddit IPO, and we've got you covered. Right now, the S&P higher by 24 points, 52.48 on the S&P. The relentless rally in stocks powering ahead today on optimism that the Fed will be able to engineer a soft landing. Dow Industrials up 315, up 0.8%. NASDAQ up 67, up by 0.4%. 10-year yield 4.27% with a 2-year that's yielding 4.62%. Spot gold down $4.50 the ounce to $2,081, pulling back from yesterday's record. Gold down 0.2%. We have got spot Bitcoin today down 2%. West Texas Intermediate crude down 0.4%, 80.91 for a barrel of WTI. Reddit shares surging almost 50% over its initial public offering price after the social media company and shareholders raised $748 million. And of course, there's Apple. Apple shares are moving lower now. Apple down 4.2%. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws. Apple says the lawsuit is, quote, wrong on the facts and wrong on the law. Again, recapping, S&P up 22, a gain of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenivek. Charlie, of course, breaking down the Apple story. I believe it's still our most read story on the Bloomberg in the past 60 minutes. We want to get more on the suit, what it means. It was filed today in a New Jersey federal court. What it is, what it's all about, what could be the potential impact legally and maybe on the business of course, at Apple. With us right now is Bloomberg Intelligence Senior Antitrust Litigation Analyst Jennifer Reese. She is with us in New York City. Hey, Jen, good to have you here with Tim and myself. All right, lay it out for us. What exactly is this suit all about?
Well, this was so widely anticipated, and as expected, the Department of Justice in these states are alleging that Apple has a monopoly, and they're saying a monopoly in 2 different markets. One, a broad market for smartphones, and a second one, a narrower market, which is a market for what they call performance smartphones. In other words, the more expensive end of the market. And that it uses its control over all the technologies that are needed for any kind of functionality on the iPhone in a way that locks in users, makes it much harder for them to switch to a non-Apple smartphone. And then that protects its monopolies and continues to allow it to charge high prices, wherever it's charging a fee for the use of the phone. And it does this in a number of ways, by prohibiting apps that would make it easier for users to switch, or by, let's say, once somebody buys an expensive smartwatch, making it so that smartwatch isn't really going to work with a non-Apple iPhone. And so you've bought the watch, you're going to hang on to the iPhone, and you're not going to switch. Things like that. They lay out a couple different examples of the ways that Apple has sort of degraded different technologies or prevented technologies from being on the phone that would keep people in its own ecosystem.
Critics to the suit might say, well, wait a second. Apple's just making sure that the Apple ecosystem is as user-friendly as possible, and the products work best when working with other Apple products. Let's set that aside for 1 second, Jen, and get into the idea, what's the Justice Department and what are the attorneys general looking for in this suit?
Well, they haven't asked really outright for any kind of a structural remedy as they have in their lawsuits against Google. They are asking for injunctive relief, not fees. That's not usually what happens in monopolization suits, but injunctive relief that really would crack open Apple's walled garden. They're really asking for an order that Apple provides more interoperability with some of these other technologies that would be beneficial, according to the DOJ, for users.
All right. When you look at a case like this, I feel like big tech has certainly been under regulators and certainly the U.S. Justice Department's radar over the last couple of decades, since that big tech has kind of rose to play such a big role in our society and has increasingly had a lot more power, if you will, in terms of what we are all doing. So how do you kind of legally game this out? Is it going to be a long court process? Does it feel like the justice has a stronger case? Does Apple have a good kind of rebuttal to it? How do you game it out?
I think this is a difficult case for the Department of Justice, just at least right now. I mean, let's first start with what you just said. This is going to be a really long process. I mean, 3 years, I think, at the least, before you have at least a district court decision. The whole market could change with generative AI and all the different new technologies that are emerging. The market could be quite different by the time a decision needs to be made. So that's one thing. The second thing is that the DOJ really tries to align this with a case in which it was successful against Microsoft in the 1990s, but there are kind of some big differences because at that time, Microsoft's monopoly over the operating system was really solid. And here you have Android, and you can't say that Android's not a significant competitor. And I think that there are some weaknesses in the way they've defined the market. To say that there's this segment of smartphones allows them to say that in the US, Apple has a 75% market share. And they kind of have to do that in order to establish monopoly power. And I'm not really sure that that's a market definition that would hold up. And the last thing I want to say goes back to something Tim just said, in that it's very difficult to prove monopolization where a company has legitimate pro-competitive business justifications for its conduct. Now, here the DOJ says that Apple's justifications, more efficient use, privacy, security, seamless operation of Apple products are pretexts, right? That the documents and the testimony won't bear that out. But, we've already seen in another case against Apple by Epic Games, a lot of that evidence fleshed out, and a judge in that case decided that Apple did have pro-competitive justifications for its walled garden. And a lot of the same evidence will be put on trial here. So I think that there are weaknesses, and it remains to be seen, what the evidence really says. Of course, the DOJ takes excerpts from documents that look bad for Apple, but you need to see the totality of the facts and the totality of the evidence to really understand the intent and motivation behind some of the conduct that's outlined here.
Hey, Jennifer, do you want to just read Apple's statement that they sent to Bloomberg News that actually addresses some of what you just talked about? Quote, at Apple, we innovate every day to make technology people love, designing products that work seamlessly together, protecting people's privacy and security, and create a magical experience for users. This lawsuit threatens who we are and the principles that set Apple products apart in fiercely competitive markets. As you mentioned, Jen, there have been other lawsuits in the past few years, specifically about Apple's App Store and the take rate at Apple's App Store. To what extent can we draw a line from that lawsuit and what's happened since then to what we learned today from the Justice Department and the Attorneys General?
So some of the differences here, the Epic Games against Apple lawsuit was quite different. The markets alleged were different, and the main failure in that suit by the plaintiffs was really in the way they defined the market. This market is defined differently, I think on purpose, because of the failure in that lawsuit. And it stands a bit on more solid ground. But, the very interesting thing, when I saw Apple's statement and what it made me think about is the judge in that Epic case who said, look, what you're asking for, Epic, is to make Apple iOS just like Android. Because Android is more open. It is less of a walled garden. And people sometimes choose Apple because they want that choice. They want the more closed off choice that they believe provides more privacy and more security. And if you force Apple to open up, you're really removing choice rather than giving users more choice. And, I think about that And that's one way to look at this situation and one way a judge might look at this situation. So really, it sort of goes both ways, the walled garden versus the non-walled garden.
Bottom line, I'm thinking our investing audience that's listening here on Bloomberg, on TV, radio, YouTube, on streaming, across our platforms. So we're watching Apple shares, they're down. We know it's been a very different tone of trade, though, for Apple this year. We've seen that stock really pull off its highs, if you will. Having said that, you say difficult for justice, a case that could be 3 years, and then in 3 years, who knows where we are. So what do you think should be top of mind for investors, just quickly?
I think exactly that time will tell, and that there should be no conclusions drawn now. There can't be, and Apple has a good shot here.
All right, really appreciate it, as always. Jen Rhee, she is our senior antitrust litigation analyst, unbelievable, here at Bloomberg Intelligence, joining us from New York City. All right, so watching Apple, we're also, of course, keeping an eye on shares of Reddit. They're up about 42%, Tim.
Yeah, shares of Reddit surging just in their first day of trading. Pricing shares in an IPO at the top of marketed range. It's the second big tech listing in as many days. Our coverage of Reddit's IPO continues with Bloomberg News senior executive editor for global technology, Tom Giles, who's in our DC bureau this afternoon, along with Ryan Gould, U.S. IPO and deals reporter at Bloomberg News here in our New York studio. Hey, Tom, I do want to start with you, just wrapping up the conversation that we just had with Jen with Apple. To what extent do you think this is a threat to Apple as we know it, Apple's identity as it sees itself as this walled garden, this ecosystem that works seamlessly with other Apple products?
You know, that is a big selling point for them, and I think you see it every day when you use their products. They're going to probably have to make some changes in the way they do things, the way you interface with their services on the iPhone and other devices. I think they're going to throw some remedies at the Justice Department and try to work things out, try to reach a settlement. As was noted in the earlier conversation, this is going to take years to play out. I think the bigger thing that Apple needs to be thinking about is what is that next big product. And will the Vision Pro take off? I think those are the bigger existential questions facing Apple at the moment. This one, I have a feeling they're going to find ways to get to remedy it without changing their fundamental identity.
All right. Hey, speaking of existential questions, how are you, Tom Giles? Someone who has seen many tech cycles, understands the ups and downs of this industry, the changes that we see. Reddit, you know, it's been around for almost 20 years, 18 years or so. Social media player. How are you thinking about its existence in today's environment and as a business going forward?
Yeah, you know, it's been a long time since we saw a company, consumer internet company, sell shares to the public. There was a lot of pent-up demand. I think in this one, there's going to be conversations around whether the investment bankers left a little money on the table with the pricing of those shares. Look, it's popular. It's got a really loyal, a rabidly loyal fan base. Also a fan base that's or user base, that's liable to turn on it as well. Right now, it looks like things are going in their favor, and I think the other thing that people are looking at with regard to Reddit is not just the advertising business model, but this idea of them licensing their data to makers of large language models to train them and to make them better. Tools like ChatGPT, you can use the conversations and the original content that is created on Reddit to make your large language models more comprehensive, smarter, more in touch with what people are thinking and doing and posting. And Reddit wants to make a big business out of that. And I think that's part of what might be driving the stock today.
Well, speaking of the stock, I do want to bring in Ryan Gould, U.S. IPO and deals reporter here at Bloomberg News. He's in our New York studio right now. So Ryan, talk a little bit about this IPO, because shares were sold at the top end of the marketed range, $34 yesterday. Bankers on a day like today, pretty happy with the way things are going?
For sure, Tim. I think this is a moment that the IPO market writ large has been waiting for probably the best part of 2 years, because we've had 2 tech IPOs in a week, both of which have either traded at the top of the range or above the range, and both of which have since gone on to trade, you know, substantially higher. If you look at Astera Labs, which just, a couple of days ago priced in New York, I mean, this is really an IPO that has it all, right? It has AI, it's chips,
So true.
it's everything you could want as a
check.
banker. And, to their credit, Morgan Stanley was the lead left on both Reddit and Astera Labs. I mean, I think, Morgan Stanley, hats off, looks to have done a pretty good job, you could say, with both of these offerings. Now, obviously, there's a lot still to be done when it comes to Reddit.
Were they hankering to get this out, though, already? For Reddit, in particular, 2 years in the making?
I think so, but I think you also have to put it on the shoulders of the company as well, because, when you're Reddit, I think Jen Wong, the COO, was on BTV this morning talking about, how this has been 2 years in the making. And I think for a company like Reddit, you just need to be able to push past it. It's a milestone, as she said. It was a wedding day for the company. And, you can go on and be a married couple, hopefully, for many years after the wedding day. But I think that the point being that they've spent so long in the quagmire of the uncertainty around tech, around IPOs, around what markets mean. And now you have a point that, okay, we've done it. We've crossed the line. The Rubicon is behind us.
But as we know, the honeymoon can be over really quickly in any relationship. Reddit shares still up 45%, $49 and change. Tom Giles, come on back in here. It's something we talked about in our last hour. Being a publicly held company brings certain demands with it and a lot more scrutiny. So it's a tougher, I understand the AI play and the data play makes sense, but it's a different environment for Reddit versus being private.
Yeah, exactly. I mean, you have investors looking for near-term returns when the user base gets angry about something and walks out, blacks out certain channels. Those things will, users or investors will be paying much more closer attention to things like that, hiccups along those lines. At the same time, Reddit, it's really incumbent on Reddit to demonstrate that these new business models like licensing your data will be able to generate money over the long haul, not just in the near term. How many different LLMs are going to need to license Reddit's data? Is that really sustainable over the long haul? It's a question that I don't know the answer to. It's a question we are asking. The other thing that they've got to do is they want to make money from services sold between users. Right. So one user sells a service to another, and Reddit keeps a cut of that. We know less about that business. I think that's less well-developed than the other two. But they're going to have to continue to roll out things like that in order to keep investors, and in order to keep that revenue coming in and keeping investors happy.
Hey, Ryan, I want to give you the last word in the 30 seconds that we have left here. Did they price the IPO too low, do you think?
In my view, I don't think so. I think it was a moment to be cautious. I mean, markets are markets, right? Like, you would have to have a crystal ball to actually realize if Reddit was going to go up or down today. The big swing factor being the retail component.
Right.
It looks as though that's working in their favor.
8%, right, of Reddit users got
exactly 8% of shares. The directed share program went towards Redditors.
All right, fascinating. Stock's still up 42%. Guys, thank you so much. Ryan Gould, U.S. IPO and Deals reporter here in studio. Tom Giles, Senior Executive Editor for Global Technology, both at Bloomberg News. Reddit right now, $48 and change. This is Bloomberg Business Week.
It's 2:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ all advancing right now. The relentless rally in stocks powering ahead on this Thursday. On optimism, the Fed will be able to engineer a soft landing, which would bolster the outlook for corporate earnings. So here's where we stand. S&P right now up by 0.5%, higher now by 25 points. The Dow up 331, up 0.8%. NASDAQ up 68. That is a gain for NASDAQ of 0.4%. 10-year at 4.27%, with a 2-year right now 4.62%. Spot gold down $5.50 the ounce to $21.80, a drop of 0.3%. West Texas Intermediate crude down 0.3%, 81.02 for a barrel of WTI. Bitcoin right now down 2.6%, 65,304 on Bitcoin. First day out for Reddit. Shares up now by 43%. Apple down 4.2%. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws. Apple says that lawsuit is, quote, wrong on the facts and wrong on the law. Recapping, stocks higher. S&P right now up 24, up 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, love this story. Of course, it's about a company we talk or have talked about a lot for years. Today, though, in a different way, if you will. We're talking about the once iconic General Electric. Used to kick off our earnings season, whose CEO at one point, Jack Welch, was revered the benchmark for corporate America, and whose mix of businesses was always seen as a great read on the U.S. economy, Tim, because they had their hands in so many different things.
Well, that iconic General Electric, is no more. Well, at least it's a very different company. And it's today's big take. It's also the cover of the current issue of Bloomberg Business Week, which you can buy right now on newsstands and also read on the Bloomberg terminal and at bloomberg.com/businessweek. Written by Bloomberg Opinion Industrials columnist and Boston bureau chief Brooke Sutherland, who has the inside story on how GE CEO Larry Culp dismantled a 131-year-old American giant. It's an empire divided. Brooke joining us right now from our Boston bureau. Brooke, congratulations to you and to Ryan on this story. The cover again of Bloomberg Business Week. I want to go back to 2018 and perhaps even earlier in the history of General Electric. When Larry Culp became CEO of GE then, what did GE look like?
It was a bit of a mess, candidly, and I think, you know, GE's own executives and board members are candid about that at this point in time, looking back. But, you know, the company was still too big and still too complicated, even though by that point it had divested much of that sprawl that Carol was talking about from those Jack Welch years. It just still had too much going on, and those businesses that it retained were not generating enough cash to pay off the enormous debts, that GE had accumulated, to the point where, you know, the company had to cut its dividend twice, actually. First under John Flannery, and then Larry Culp cut it again when he became CEO, down to basically a nominal penny per share.
It's amazing, right? You know, Brooke, you've been covering this company for a long time. We've been talking about it with you for a long time, and it is interesting that a company where we used to think their financial business was just incredible, right? And how it became really, as you say in your story, like an albatross for this company in particular. Walk us through, though, Larry Culp being CEO and some of the really tough tasks that he had to do to make it, you know, a viable mix of entities, if you will, going forward, and separate companies.
I think what made this turnaround so complicated is that it was not just one problem that Larry Culp had to fix. When he came in as CEO, there was so much attention to the debt for very good reason, because this was probably GE's most existential problem. And figuring out how to bring that down was Larry's #1 task. And he did that in two different ways. One way was that he made some well-timed divestitures, most notably the sale of GE's biopharmaceutical assets to Danaher, which closed about 3 weeks after the pandemic started, and essentially brought air travel to a halt, creating an existential problem for that aerospace business. And then he also later sold GE's jet leasing business to AerCap. Those were the two biggest parts of his asset sale plays. But then what he also did, because you have to think about debt as, you know, a two-part question from an investor standpoint line. It's the absolute number of the debt, but then it's also how much money do your operations make? And that's where I think the real turnaround happened at GE, because Larry is just very meticulous about everything that happens on the factory floor, every single process, every single manufacturing line. And they really did, a full-scale assessment of their manufacturing operations to find every possible way that they could improve and eliminate waste. And I think what's really the most striking to me, though, is the culture change that's happened at GE, especially having covered this company for so long. There's a much greater sense of humility in the Larry Culp era, and a recognition that GE is not perfect, that it needs to be continuously improving and seeking out those sources of inefficiency.
Is it fair, Brooke, to draw the line back to Jack Welch from the culture that was shifted under Larry Culp? Was it a shift from the Jack Welch culture?
Well, remember that, Jeff Immelt was there for about 20 years, so he maybe had a role to play here as well. But I think, that what GE was sort of known for was this mentality that anybody with an MBA could run a business. And, in the Jack Welch era, you did have this mentality where he would sort of systematically cut the bottom 10% of the workforce. And it did feed into that mindset of, if you survived all of that, you were the smartest person in the room. And I think there's something very dangerous about that for any company, really, but especially for a manufacturer whose products go into many very important forms of infrastructure, not least of all airplanes.
It's also really impressive. You look at shares of GE, they are up almost 40% year to date, hitting another 52-week high today. I'm not sure if it's, I've got to look a little bit more perspective in terms of the overall trade, but nonetheless, a 52-week high, quite a rally this year. So the outperformance is impressive. And of course, it has to do, I'm sure, with all of the things that Larry Culp is doing. Having said that, when I think about GE, I had an uncle who worked at GE up in Connecticut. I mean, they used to make a lot of stuff. And is that kind of getting back to its roots?
I think it is. It definitely is. I mean, to your point, it had its hands in everything, but it wasn't necessarily great at doing all of those different things. And I think what Larry has done is really focus the company on the things that it's good at. And so for the aerospace business, that means they're going to make jet engines, and they're going to make really good jet engines that perform well and get those airplanes where they need to go. In the case of GE Vernova, that's now an electric grid business, a gas turbine business, and a wind turbine business. And they've had some issues there, but they're working through them, and the business has become much more profitable and efficient. And GE Healthcare was already spun out, but that too is focused on what it's good at. I mean, I think it was really telling when Larry held the GE Aerospace Investor Day in early March. He said, we are not going to be all things to all people. That was certainly not the mindset for the GE of old.
There's this idea, Brooke, that bigger is better. It's certainly, that's how we saw GE go when it acquired so many businesses and built so many businesses for so many years. Now that it will, as of next month, be 3 distinct companies, how can it make sure that those 3 companies perform better as separate entities?
I think, we've sort of moved beyond the bigger is better, and actually I would say that focused is better. And so I think just sticking with that focus and really continuing to drill down into the manufacturing operations of these businesses is going to be crucial for GE. Now, part of what they have done is they've set up these businesses where they can think more strategically about acquisitions down the road. And so I do think that will be part of GE's go-forward strategy. Certainly on the healthcare side, acquisitions are a very important part of growth for that business. And in aerospace, they will have a lot more cash to play around with than they have had in the recent past. And so I think it'll be really interesting to see what GE does with that. What Larry Culp has said is that he's going to be strategic. He's going to look for complementary assets. He's not going to necessarily buy some sort of monster aerospace and defense giant out there. But there are ways in which, they could sort of push the aerospace portfolio perhaps past its current focus on jet engines and defense products.
Brooke, all day we've been talking about the Reddit CEO, and sometimes it's, being at the right place at the right time in terms of the right market environment or the right AI environment, which Reddit is certainly talking a lot about and how it can benefit. Having said that, that can be so true for a CEO. You mentioned Jeff Immelt, and it does, I forget he was there for so long after Jack Welch. It was a difficult position to be in, coming in after Jack Welch. And you know this company better than I do, but I mean, a lot of people now kind of look back at the Jack Welch era and have a lot of questions about it. And Jeff Immelt, kind of had to deal with a lot coming off of him. Having said that, Larry Culp, why is he kind of the right person at the right time? Because he was asked twice, right, to take over and take this top spot before he finally signed on.
Sure. I mean, I think it goes back to his operational focus. And I don't think this was necessarily clear when he took on the role. Like I said, there was so much attention on the debt because there had to be. It was just a massive problem for GE. And then, of course, they had to figure out what was happening with their long-term care insurance business, where they had a $15 billion reserve shortfall. I mean, everything was sort of in free fall. And I think what maybe got missed in all the chaos and the noise of that is that there is an operational turnaround that also needs to happen. And if you're going to do an operational turnaround, there's probably no better guy to do it in industrials than Larry Culp.
But I love the quote in the story that when he got there, he said, what, the place was a mess.
It was, and I mean, there are little things that you wouldn't necessarily be able to appreciate from the outside, but for a manufacturing company, I mean, if you think about the distance in which a part travels across a plant floor, or, you know, minor tweaks to the way that you do something, all of that adds up to, you know, what the cash flow number looks like at the end of the quarter or the end of the year, and that's really what he's doing, is paying attention to those little things that add up over time.
Hey, Brooke, we're talking a lot about the recent history of GE, but this is a company that goes all the way back to the 1800s. Just remind everyone about the identity of this company and the legacy of this company and Thomas Edison.
Sure. I mean, it's really just an industrial icon. And, you know, as we say in the story, it was a monument to American capitalism. You know, it was created to commercialize Thomas Edison's light bulb and other electricity product inventions. And then it really got to the point where it, you know, literally was swallowing entire industries. And, you know, going back to Carol's comment at the beginning, it had its hand in everything. I mean, washing machines, credit cards, plastic resins. They owned NBC. They had a massive real estate lending business. They loaned planes to airlines. They built jet engines. I mean, anything you could think of, GE probably was involved with at one point. One of my favorite examples is that they used to own a pretty sizable chunk of Dreyer's Grand Ice Cream back in the day. So, I mean, it just illustrates just the sheer scope of this company and just, you know, how involved it is really in sort of building the life that we have in America.
All right, good stuff as always. Brooke Sutherland, thank you so much, so appreciate it. The Big Take, the cover of Bloomberg Business Week, Bloomberg Opinion Industrials columnist, and Boston Bureau Chief Brooke Sutherland joining us on GE.
Okay, from New York to Boston to Washington, D.C. now for a check on the latest world and national news. For that, we go to Amy Morris in the Bloomberg 99.1 newsroom. Hey, Amy.
Hey, Tim, Congress has released details of that $1.2 trillion deal that would keep most government agencies open through the end of September. The clock's ticking, though. The deadline is midnight Friday. There still could be a short government shutdown this weekend as the bill heads toward a vote. The Biden administration continues to express concerns that if Israel invades Rafah in the Gaza Strip, it would cause many more civilian casualties when famine and disease are spreading. It does sound like Israel, though, will invade Rafah regardless of what they hear from the White House next week. That's when Israeli Strategic Affairs Minister Ron Dermer will be in D.C. He told a podcast that, quote, "We're going to go in and finish this job."
It's going to happen, and it will happen even if Israel is forced to fight alone.
Secretary of State Antony Blinken is in the region pushing for a deal between Israel and Hamas that would lead to a 6-week ceasefire and an exchange of hostages for Palestinian prisoners. The state of New York may be ready to seize Donald Trump's Westchester assets if he doesn't pay up. New York Attorney General Letitia James has said that she is prepared to start seizing Trump assets if he misses a March 25th deadline to post a bond for 120% of the state's $454 million judgment, just so he can put it on hold while he appeals. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they continue to power higher. The relentless rally in stocks powering ahead on optimism that the Fed will be able to engineer a soft landing, which would bolster the outlook for corporate earnings. Right to the numbers, S&P now up 1852.42, a gain of about 0.4%. We've got the Dow up 284 now, up 0.7%. The NASDAQ Composite Index up 35 points now, up by about 0.2%. 10-year 4.27% with a 2-year 4.62%. Spot gold down $4 the ounce to $2,182, a drop of 0.2%. West Texas Intermediate crude down 0.3%, 81.01 a barrel, and Bitcoin down now by 2.8%, 65,206. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws by blocking rivals from accessing hardware and software features on its popular devices. Apple, meanwhile, says the lawsuit is wrong on the facts and on the law. First day of trading for Reddit, priced its IPO at $34 a share, right now at $46.20. For Reddit, that represents a gain right now of about 36%. Recapping, stocks higher, S&P right now up 20, a gain of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, episode 4 of the deal, episode 4. Shall we try that again? Take 2, everybody. Episode 4 of The Deal with Alex Rodriguez and Jason Kelly dropping tonight, featuring Yankees Hall of Famer Derek Jeter.
Jeter, of course, a teammate of Alex Rodriguez when they both played for the Yankees. It airs this evening at 9 p.m. Wall Street time on Bloomberg Originals. You can also catch it Friday at 7 p.m. on Bloomberg TV. And the podcast already available for download at Bloomberg.com or wherever you get your podcasts.
Bloomberg Originals chief correspondent Jason Kelly is joining us here in studio on the latest episode. This one, hello.
Hi.
This one just sounds like what a blast.
Yeah, this one, we definitely had our calendar
Not that the other
circled
ones
here.
weren't, but this must have been fun.
This was fun, and, you know, this is a pair that has a long history together, a long and somewhat complicated history. I think almost anyone would say if you Google Alex Rodriguez, Derek Jeter relationship, like, put aside some time.
So did you
you're gonna have to
deal
read.
with this?
We did. We did talk about it. I mean, and... You know, we didn't spend the whole time talking about it. I think much to some people's chagrin. We did talk a lot about business. We'll get to that in a second. But, you know, these are two guys who literally have known each other for longer than they haven't. And, you know, they met when they were 17 in Alex's case, 19 in Derek's case. They came into the major leagues more or less together. They were very close friends, ultimately teammates here in New York at a time when, you know, things didn't go as well. And then they went really well because they won the World Series. In their post-playing days, they've sort of come back together, both on air and off air. They swap some investment advice. And in fact, let's take a listen to what their conversation, actually. Alex sort of tees up Derek to talk about how he approaches deals.
How do you think about investing? Does investing excite you? Are you someone that picks up the phone and calls a Michael or calls Passat or one of your friends? Do you share ideas? How do you think about investing when opportunities come your way? Because there's going to be viewers that are going to say, I would love to have my hero, Derek Jeter, invest in my company. I'm a young founder. How do you think about that? How do people approach you? How do they find you?
Yeah, I think one of the benefits and perks of playing in New York is you get a chance to meet a lot of people. I've met a lot of people throughout my career. I still get a chance to meet a lot of people. The way I look at it, Alex, is I invest in people. You know, you run into people all the time that have great ideas. Everyone has a great idea. Everyone has a business, going to be $1 billion business. But you have to invest in people, and you have to get to know them, and you have to know if they're passionate about what they're doing. Some people have businesses where they're in it to make money. Look, we all want to make money. But if that's your number one priority, if you're not passionate about it, then I think that's a red flag. So I always like to invest in people. I think that works for, you know, works in clubhouses and it works in businesses. It works in investments. So I tend to just lean towards the you know, the character and the passion of the people.
So there you have it. That's how you invest if you're the captain. I mean, first of all, it's like a handsome contest up there. I mean, incredible.
I was just gonna say, were you like, first of all, what a cool, like, you know, 2 people to have, 3 of you together. Like, there's just a moment where you're like, oh my God, like this is pretty cool stuff.
Well, and it's very rare, I have to say, for the 2 of them to sit down and have this sort of conversation. I mean, Alex said to me as we were prepping, he's like, this doesn't really happen. Like, we don't sit down together and have a long form conversation like this, certainly on air. It's one of the, Alex told me, I think it's only the second or third time they've ever really sat down together for this type of interview.
Are they in business together at all?
They're not in business together at this point. Who knows? Maybe they could be at some point. They've taken relatively different paths.
Yeah.
Derek went into baseball ownership and management originally. Alex is
Marlins,
now
right?
exactly with the Marlins, and Alex now obviously pursuing the basketball franchise.
So, but what about their business investments outside of those things? I
Yeah.
mean, what do those end up looking like?
So Alex is very much, real estate heavy. Where they overlap is they do like early stage sort of venture style investing. Derek has invested. I've talked to him about this before on Bloomberg Television and radio about some collectibles businesses he's looked at. Both of them, I think, Derek especially, and this sort of tracks with their personalities, like sort of taking his time. He's got 4 young kids. He talked about that in the interview. He talked about not wanting to go back into ownership unless he was in control, which is part of what sort of went sideways a little bit when you look back to what happened with the Marlins. He was a minority owner and an executive, but wasn't really the person making the final decisions, and he talks about that. So, their philosophy, I think what's interesting is it's very much honed by their experience as ball players. And we've talked about this, the three of us before,
Makes sense, right?
sort of what you take from that experience, and both of them, clearly applying that.
I think it's always interesting. I feel like when we talk to a lot of entrepreneurs, Jason, you know this, I know Tim knows it from some of the conversations we've had around this table, is that people always talk about it. It's like, yeah, I want to make money, but I really care about the people and the business they're creating and what they are about. That's what I ultimately will kind of make me say, I want to invest in this. It's the person.
Totally. And I thought, what we just heard from Jeter was really interesting because he has this perspective that candidly none of the rest of us have, or very few people have, which is learning about people in a clubhouse, in a locker room, on the field, under pressure. It's like we all face a certain amount of pressure in our jobs. Like you guys have high pressure jobs, but I dare say not like standing at home plate at Yankee Stadium, in front of 50,000 people with the World Series on the line.
Right.
Hey, you've had some pretty incredible guests on the show. Can you give us a preview of still what's to come?
Sure. Next week, I'm very excited because we have Hannah Storm coming on, a real pioneer.
Yeah.
We actually taped that in front of an audience up at the Village in Stamford, Connecticut, which was super fun. Our friend Brent Montgomery's place, Alex and my friend. So that was cool to see her interact with people. I mean, she is a born performer, obviously, but one of the interesting things about her, and hopefully we'll get to talk about it a little bit more, is she grew up in basketball. Her dad was actually the commissioner of the ABA. So she really came to this very naturally. And, she was in sports, then she was not in sports in terms of sportscasting, now has her own production company. So that's very cool. And we've got a couple of team owners coming up and some surprises toward the end of the season.
All right, listen, before you go, got about a minute and a half left. Everybody in the newsroom's talking about their brackets. March Madness underway. Great story on the Bloomberg. Some of the folks that are a part of Brackets for a Cause giving some tips about how they're doing it.
So cool. And one of the funny things, sort of tie it all together, is it's about the people for them and basically who they can deploy. Basically, none of them just sit down with a blank sheet of paper and like, well, do I like Illinois or do I like, Gonzaga?
Nothing casual about
this.
this.
Hold on. They recruit people.
Oh, yeah.
them to
They
help
assign
them?
analysts. A lot of them have their kids.
I
They're
love
asking
this.
advice. John Gray, who you guys know well, who won just a couple years ago, his ace in the hole, and he's talked about this, and he talks about it in this story, his high school teammate, who's now a basketball coach, delivered him the winning bracket 2 years ago. And
That's
so
what I'm saying.
he's an expert.
There's nothing like, oh, let me just do this casually. No, it's like, whoa, let's get the team in
Oh,
here so
yeah,
I win.
this is no joke. I mean, like, there's real money on the line. So just, very briefly, we're very excited about this year because record number of participants, 58, and record number of money, almost $1.2 million in the pool, split evenly between the men's bracket and the women's bracket, which is important. The women's tournament, as you know, kicks off tomorrow, and obviously all eyes on Caitlin Clark there. But the men's, it's underway. In fact, I'm going up to a party in just a few minutes here at Bloomberg with Peter Grauer.
Party?
Yeah, come on up.
We'll be here.
Yeah, I know. You'll be here working, and I'll be upstairs working and watching basketball.
Yeah. Jason working.
I know. Listen, this is a job.
Somebody's got to do it. Jason Kelly, Chief Correspondent, Bloomberg Originals. Check out The Deal with Alex Rodriguez and Jason, airing tonight at 9 p.m. Wall Street time on Bloomberg Originals. Catch it Friday, 7 p.m. on Bloomberg TV. This is Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws by blocking rivals from accessing hardware and software features on its popular devices. Now, this suit was filed in New Jersey federal court. It marks the culmination of a 5-year probe into the world's second most valuable tech company. The Biden administration has made competition a cornerstone of its economic policy, with Silicon Valley becoming a key focus. Apple right now down 4.2%. The company, by the way, says the lawsuit is wrong on the facts and the law. Reddit shares rallying. First day of trading. We've got Reddit now at 46.54. Reddit shares up by about 36% after pricing its IPO at $34 a share. Nelson Peltz has received the backing of an influential shareholder advisory firm and a group of business leaders in his bid to join the board of entertainment company Walt Disney. Institutional Shareholder Services, the proxy advisor, says Disney's investors should vote to elect Peltz, the head of activist firm Trian Fund Management, as a director at a shareholder meeting on April 3rd. The move puts ISS at odds with another leading proxy advisor, Glass Lewis. Disney shares, they're up now by 0.7%. Micron Technology, the largest American maker of computer memory chips, posted its biggest gain in more than 12 years after giving a surprisingly strong sales forecast lifted by demand for artificial intelligence hardware. Shares of Micron today, they are surging by 14.7%. Among other chip makers, NVIDIA up by 1%, Intel up by 0.7%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 991 newsroom in Washington, D.C. Hey, Amy.
Hey, Tim. Israeli Strategic Affairs Minister Ron Dermer will be in Washington, D.C. next week so he can hear concerns from the Biden administration about a potential invasion of Rafah. Now, the argument is that such an invasion would cause many more civilian casualties at a time when there's famine and disease spreading through Gaza. But Dermer told a podcast that, quote, "We're going to go in and finish this job."
It's going to happen, and it will happen even if Israel is forced to fight alone. We're going to fight until the battle won. There's only one possible force that could stop Israel, and that's the Israeli people.
Secretary of State Antony Blinken, meanwhile, in that region, pushing for a deal between Israel and Hamas that would lead to a 6-week ceasefire and an exchange of hostages for Palestinian prisoners, along with a big increase in humanitarian aid to the more than 2 million Palestinians in that coastal strip. Almost $6 billion in student loan debt will be canceled by President Biden for about 78,000 public service workers. The White House says workers, including teachers, nurses, and firefighters, will get the debt relief through the Public Service Loan Forgiveness Program. Those getting the debt relief will receive an email signed by President Biden saying they're on track to get student loan forgiveness in less than a year. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Carol and Tim.
All right, Amy, thank you so much. Really appreciate it. All right, folks, now to our one more thing. Actually, it's going to be, how about 2 more things if we can squeeze them in this hour? First of all, Reddit shares.
I don't know where you're going with this. I only know about one more thing.
Well, Reddit shares, first of all, jumping as much as 70%. It's first day of trading. It's IPO today. Stock is just below, well, just about $47 a share. Social media company and its shareholders raising $748 million. Top of the marketed range. Strong signal out of its IPO window.
Yeah, the company had marketed 22 million shares for between $31 and $34 per share, but they did end up IPOing at $34 per share. Reddit has a market value of about $8.2 billion based on the outstanding shares listed in its filings with the SEC. If you include stock options and restricted share units, the fully diluted valuation, Carol, is just shy of about $10 billion.
Yeah, so not too shabby, right?
No.
Go back how many years, right? And there was a valuation
funding
round,
Yeah,
right?
they did a funding round in 2021 for $10 billion, or that valued the company at $10 billion. So if they go north of that, it's good news for those investors.
All right, so Reddit, the IPO, is your number 1 Reddit story on the Bloomberg terminal in the past 60 minutes. The number 3rd most read story on the Bloomberg terminal has to do with Apple, and that stock is off more than 4% as we speak. This is regulators on both sides of the Atlantic are training their eyes on the company. So really unnerving investors with fears over fines and threatening its market dominance.
Yeah, so in the U.S., the Justice Department and 16 attorneys general are suing the company for violating antitrust laws. Also, in Europe, the company is said to be facing probes about whether it's complying with the region's Digital Markets Act. As you mentioned, Carol, shares slid more than 4% today. That pulled about $115 billion in market value, and it brings Apple's year-to-date loss back to 11%.
And just to remind you, earlier this hour, we caught up with our Jen Rhee over at our Bloomberg Intelligence team. She's a senior litigation analyst looking at this case, and she's saying, listen, this is going to be a long case, probably 3 years in the making. Who knows how the market environment changed in certain terms of what the Justice Department specifically here in the U.S. are filing for and suing for at this point, so things could change. But right now it's got investors a little bit worried, no doubt about it.
Yeah, I wonder how it plays out. Apple in a statement coming out and saying that, hey, this is the Apple ecosystem, this is what we make products for, but it'll be interesting to watch this one over the next few years.
All right, quick check on the markets, folks, as we wrap up this hour of Bloomberg Business Week on radio, TV, YouTube, and Bloomberg Originals. You've got an S&P 500 just up about 18 points, and you've got a NASDAQ 100 up about 0.5%. That's good for a gain of about 90 points. Do not go anywhere. Tim and I continuing on radio, on YouTube, Bloomberg Originals, Bloomberg Business Week on
Bloomberg. You're listening to Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we've got just about 1 hour to go until the closing bell on this Thursday, March 21st. Carol Massar along with Tim Stenivek, and the relentless rally in stocks powering ahead on optimism, Tim, that the Fed will be able to engineer that soft landing, which would bolster the outlook for corporate earnings. That's your backdrop overall, more broadly on this Thursday.
Yeah, the S&P 500 up by 0.4%. The Dow Jones up by 0.7%. The NASDAQ 100 higher right now by about half.
What did you say to me as we were getting ready to go into the studio a couple of hours ago? You said that
it was so long ago.
The S&P could get another record today.
Yeah, number 20 if it closes at a record. So it's 20 just in 2024.
Interesting, right? The momentum we've seen.
I do remember what I said to you.
He does remember. He always remembers. 2
hours ago. But.
All right, folks, coming up, we're going to get a check on the economy and regional banks with the CEO of Citizens Bank of Edmonds. So looking forward to that conversation.
Yeah, shares of Micron. Did you see this, Carol? Is this one of your gainers?
Yes, it is.
Okay, good. Shares of Micron Technology just rallying to all-time highs today, up a whopping 14.7%. Thanks again, AI.
Yeah, anything that's AI related. That stock, by the way, up almost 30% so far in 2024. And how about a new yacht?
I will say I'm not in the market for one.
Okay, you could be.
I could be. Currently not in the market.
Espresso machines are more your style.
Thank you, yeah. No yacht for me.
All right, but we're
the maintenance on them, that's where it gets you.
It's not the initial purchase,
no,
it's
that,
the maintenance.
that crew of 7 also is kind of pricey.
All right, we're going to go to the Palm Beach show, get an indicator on kind of the high end, the luxury end of the market. We're also going to talk, though, about kind of who are buying, right? Get some of the demographics, if you will. And if you've ever been quiet in a group setting and then regretted it, we've definitely got a book for you.
Yeah, we're going to speak to the author of Unlearning Silence a little bit later in the program. All that and more over the next 2 hours. First up, though, a check of the day's trade and top business stories. Here's Charlie Powell.
Hi, thank you very much indeed. 59 minutes to go until that closing bell clangs on Wall Street. Stocks higher across the board. The Dow, the S&P, NASDAQ, all very much in the green, led by industrials and banks. S&P right now up 19. That is a gain of 0.4%. The Dow up 300 points, now up 0.8%. NASDAQ also building on yesterday's comments from Fed Chair Jay Powell. We've got NASDAQ up 38 points, up by 0.2%. 10-year yield 4.26%. The 2-year 4.62%. Spot gold down 0.1%, 21.83 a barrel. An ounce in terms of oil. West Texas Intermediate crude down 0.4%, now 80.93 a barrel on WTI. And Bitcoin down 2.8%, 65,220 right now on Bitcoin. So it is an up day for the Dow, the S&P, and NASDAQ. Gargi Chaudhary is head of iShares investment strategy at BlackRock Financial Management, and she was on Bloomberg this morning talking about the Federal Reserve and Jay Powell's news conference.
It was very interesting to hear Chair Powell sound so confident about the deceleration. He did say he's not gaining greater confidence, but he still seems to be quite sure that this is just a bump along the road. And for the most part, he's focusing on the deceleration that we got in the second half of 2023 and not so much on the acceleration in the first 2 months of the year.
First day out for Reddit, very closely watched right now at 4839 on Reddit. Reddit shares up now by roughly 38%. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws by blocking rivals from accessing hardware and software features on its popular devices. Apple says the lawsuit is wrong on the facts and wrong on the law. Again, recapping, S&P up 16, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Well, the KBW Bank Index extending Wednesday's Fed-fueled risk-on gains, rising as much as 2.5% in early trading before paring some of those gains, up nearly 1.4% right now. The index, Carol, touched the highest since March of last year. That, of course, was when the whole sector was in turmoil.
So much was going on. For a check on regional banks and really more broadly the economy, let's bring in Jill Castilla. She is Citizens Bank of Edmond president and CEO, also a U.S. Army veteran who held various posts at the Kansas City Fed. She joins us here in our Bloomberg Interactive Broker studio. Jill, so nice to have you here with Tim and myself. A lot to get to. Talk to us, though, first about the Fed and how you were thinking about the meeting yesterday, because I think there's some analysis that maybe they're kind of dragging their feet when it comes to making some rate cuts. How do you see it based against the business environment that you also see at your bank?
I mean, speaking from just what I'm seeing on Main Street, the economy seems to be still very strong. Our lending activity is robust. We're still seeing great CRE still activity in Middle America, even though we're having some stress.
Commercial real estate, you're
commercial,
talking about.
yeah, commercial real estate. Deposits have stabilized. Net interest margins kind of across the 4,000 banks like mine is starting to also stabilize. It was compressing pretty rapidly, and deposit pricing is now kind of more stable. But loan volume is there. Economy seems really chugging along quite well, and I think we've seen consistent messaging from the Fed that they're going to be really data driven, and the data is showing that the economy is doing quite well.
Any signs of stress that you're seeing from your customers at all right now?
And we finished the year with 0 past dues, 0 non-accruals, and 0 classified loans. Never in the history of our institution have we had those types of numbers.
How would you have answered that question a year ago?
I would have been concerned about not so much the lending side, but just the uncertainty when it came to deposits, because we had the regional banks, the stress that was happening there, and education to customers about what uninsured deposits were. We're right at 5% uninsured deposits.
So meaning, 95% of your deposits are insured by the FDIC.
That's exactly right. And so most banks like mine are like that. So it's an education process. The confidence and the customers expressed in us was quite high, and we were just at the front of being transparent and open and just accessible through that kind of transition.
So you said you've never seen this before?
Never.
So how do you explain it?
I mean, there's still so much money out there, and there's so much optimism, even with the difficulty of having the inflationary pressures affecting families. I mean, that's happening, with small businesses. But I think that there was just we couldn't hire, fast enough because there wasn't the labor force there. And so small businesses didn't overcorrect that optimism. And so I think it's kind of kept things in check. We're seeing some small business stress. You just can't, you've got to have a good business plan and good product to be successful. We're there for a period of time. It was kind of irrational exuberance.
Help me out, though, when you say there's so much money out there, meaning what? Money for lend? What do you mean by that?
There's a lot of investor money still out there that's either investing in real estate or buying businesses, a lot of M&A activities that's still occurring for small businesses. And so you just still see investor optimism out in the marketplace, not really thinking about the market, but really what's happening on the ground.
Hey, tell us more about the focus of your bank. It's single branch, employee owned in Edmond, Oklahoma. Who are your customers, and what are the segments that you're not just active in, but prominent in?
Yeah, so it's just your absolutely traditional community bank. If you watched It's a Wonderful Life, we're basically George Bailey.
Kind of feels so lovely against the backdrop that we've grown into, but go ahead.
It is really interesting. So we have, as our average deposit, our median deposit is right at $12,000. So has small depositors.
Retail, this isn't business.
But small businesses
small
and
business.
consumers.
Wow, okay.
Very kind of equal on the deposit side. And then our lending, we do traditional mortgages as well as small business loans and commercial real estate.
On the mortgage side, side, with rates at roughly 7% for a mortgage right now, how have you seen it slow down locally?
Oh, it's come almost to a complete halt
It
in
has.
some ways, but a lot of cash buyers still out there. There's still people moving into town that still need to buy a home. But then whenever you're looking at rent availability, which has increased lately, it used to be really difficult just a year ago to get a house for rent. Now it's a little bit less expensive to do that and then more accessible.
So your mortgage business is almost completely dried up?
Oh, yes. Yeah. The mortgage business is very low.
When do you think at what rate do you think it'll come back?
Yeah, I think whenever we're in the sixes, that really helps, kind of momentum whenever you start
You see
getting
people
into the
walking
sevens.
in
Yeah.
when you're in the sixes?
But I think it's starting to normalize. I think the expectation has been like, well, we're around historic norms right now. And so I think realtors are starting to accept that and consumers are as well.
What's the upside of being a bank like you are, right? That's kind of an anomaly, right? In a big bank kind of environment, certainly here in the New York Metro. But there's upsides and downsides to everything. What's the upside? What's the downside? Or how you think about competition, especially in the digital space where, even someone who's got, an actual brick and mortar, if you will, that you've got to compete with the digital space as well, especially for a younger generation.
Yeah, so it's just a great question. So we've been around for 122 years, and our plan is to be here for another 100 years. And so where we are so accountable to our customer base and that accessibility. I sit in our lobby, so customers come straight into my office. But whenever we're competing in the digital space, we just launched a digital bank for the military. And so this bank, also a $350 million bank, we just received our first patent for a completely remote self-service bank. So just because you're small doesn't mean you can't be disruptively innovative.
Can you talk a little bit about that? Because you are a U.S. Army veteran, and a lot of your family, your husband served, your kids went to military academies and are serving. What are the unique needs from the military when it comes to financial services?
Yeah, so soldiers, a new soldier like I was whenever I enlisted, many of them showed up unbanked, and that's still occurring. And they still are quite susceptible to predatory lending.
Because they were so young?
Yeah, so many banks won't open independent checking accounts for 17-year-olds. They have to bring their parents in. Many come from situations in which there's not a lot of financial literacy and support around them. So it's really their first job, and maybe their first job in their family in a couple of generations. So it's really a great opportunity for us, we think, to be able to really meet someone where they are, provide financial literacy around that, and really understand this young hero coming to serve their country. How can we support them best to get them on firm financial footing?
Can't agree. We have all these people who go fight around the world for, to defend democracy, defend freedom, and yet they're often left behind in so many different aspects of our society.
Yeah, we talk so much about after they serve too, Carol.
Healthcare, financially, educationally, and then you're talking about banking. So tell us about how this platform will work, and who will you open it to everyone?
Yes, it's open to everyone. It launched in August.
In the military, anybody.
Anybody in that qualifies for a bank account can open an account with us. It's a 2-minute account opening. We're using alternative identification methods that typically aren't available in a digital bank. So if you have a tribal card, if you just have your military ID, sometimes you can't open accounts in most digital banks in that method. It also gives them an instant direct deposit form signed by me that they can text to their recruiter. So while they're sitting there, they can open their account and not have to worry about transportation. Many of these young people don't have cars. They don't have a banking relationship. They're wanting to enlist, and so then they're having to leave and go to the bank to do that.
As you mentioned, you're more than a century-old bank, traditional bank. How do you compete with the venture-funded startups that are going after the same demographic?
Yeah, I view them as a lot of great, healthy competition, and many of us are really great friends, and we learn from each other. And so we partner with a lot of venture-funded startups that are in this business. I mean, who we partnered with for our digital bank, that we're in that space. And so
because a lot of these are fintechs they can't necessarily call themselves banks, but they partner with banks.
They do,
for financial services. So you've partnered with some of these fintechs?
I partner and I mentor many of them. I mean, we're cultivating that space because it's crucial to the longevity of a community bank that we have strong alliances with our fintech community.
We're talking about Jill Castilla. She's Citizens Bank of Edmond President and CEO here in studio with us. Jill, as you said, for Roger is the service, right? It's a digital bank offering for military members. You said for those who qualify, I'm thinking a 17-year-old, what's required for them to qualify? Because I do wonder how many will pass that qualification, how many will not?
Yeah, it's a very low barrier to entry.
Is it?
So basically, it's having a valid identification.
And that's it?
Yeah, and we also verify kind of where they are to make sure that it's not a fraudulent account, so.
How do you make money on these accounts?
That's that. You know, we have a motto: if we do good, we'll do well. And so the focus has been build something that is amazing, and then the financials take care of itself. I mean, that's what's great about
So
not
are you
being.
charging for these accounts?
They're free accounts, and there's no fees associated with them. We do a roundup and a match. We have a really nice, healthy interest rate on savings account, and so really the only way that you make money off of this type of account is through interchange revenue from the transactions.
So when somebody swipes their card,
so
you get a
benign,
portion of
yeah,
that.
we reimburse all foreign ATM fees. You know, there's no user cost associated with this.
And where are you seeing the footprint right now of people adopting the accounts?
Yes, so it's widespread. We have them overseas. We have veterans that are living overseas. They're opening accounts, even though we're targeting that entry-level service member.
Do you have more people getting these accounts? These I don't want to call, what are they? They're not virtual accounts, but they're online only accounts.
Yeah.
Do you have more people who have these accounts than customers who are walking through the door of the branch?
We're opening them out at the same pace, but we have much more accounts in our physical branch than we do in this
But eventually
digital
you'll
branch.
probably have more.
Yeah, I think it probably will. It's the ease and accessibility to be able to get banked. Where previously going into bank is so intimidating. I remember growing up and being intimidated going into a staunchy bank, and be able to reduce those barriers. It's good for everyone.
Do you remember the first time?
I actually remember my first book, but it was interesting. It was
I did
kind
too.
of
My parents brought me to open a checking account, and I had to be with them. And yeah, it was like.
But you did. You had your family do
Yeah.
it, right? And it was like
We had to
your
sit down with somebody.
and it was your birthday money
Yeah.
or whatever, or holiday money, and we started really early. What kind of breaks my heart is to hear you talk about these individuals who, when you talk about being, unbanked, if you will, it's often we're talking about emerging economies or something, right? And they're trying to figure it out, and often technology comes to the
Right,
rescue.
we're not talking about the U.S., right?
Right, we're not, and so it kind of breaks my heart that there are folks. It's not a new story, and it shouldn't break my heart because I've heard it before, but that are just left behind individuals in the system.
Well, I was economically vulnerable when I enlisted, and then a family member wrote checks on my account while I was gone and took all that money, and that was 30 years ago.
Wow.
I shared that story, and a young lady came up to me and said, that was me, and she was 18 years old and had just enlisted a year before and had to have her mom on her account when she opened the account, but the mom had a garnishment, so when the money posted in her bank account, it was taken. So this is a story that's gone on way too long, and so it's really, we feel like no one else is coming. They've had a chance to come, and no one else is coming, so it's our job to fix it.
How many people do you have so far?
So we're right around about 1,000 that we're serving right now, and so we really a small institution, so we don't have like the huge digital marketing push that other digital banks do. We're not VC funded, but we are seeing just great receptivity on an organic basis.
Community banks, community bank, it's employee owned. We've seen so much consolidation in the last few years. I mean, in the last few decades in this space. Can you tell us that your bank will remain independent while you run it?
I would not be here if there was anywhere in the cards that we were thinking about not being independent. We feel like we have this kind of audacious thought that we'll lead the way for everyone else and show them how it's done. We want to be here another century.
Do you want to grow physical branches too?
I sold our physical branches and just to have the one, and that's why we invented this other space, is because we had demand in another geography. So now customers can walk into our bank 24/7 in this little remote electronic banking facility with their phone, deposit up to $10,000 in cash, withdraw up to $10,000 in cash, get rolled coin, deposit loose coin, and conduct their banking transactions 24/7 integrated with our core. So it's like a small business ATM.
I have seen some of the big banks start to do that also.
Well, we have the patent.
Okay.
So,
maybe
you might ignore them a little bit.
Done.
Do the exact same thing.
Just got about 30 seconds left here, Jill. I do think about, the importance of community banks, right? What you see versus maybe, what a big financial giant that is many miles away doesn't see.
Well, and I think we get lumped into the big regional banks when we think about all the small ones are ones that are less than the top 20, whenever there's 4,000 of us, less than $1 billion. We are here serving our communities every day. We're the ones supporting the Little Leagues, that we're in the grocery store aisles, accountable to our communities. So you don't need to worry about kind of what Wall Street's thoughts are on the bank, because you know what the bank is doing day in and day out. You see the loans that they're doing. You see if they're being responsible with their deposits, and you see how they're investing and building their communities.
Great stuff. Interesting. And come back and let us know how Roger's doing. It'd be interesting to see. Really fascinating. Jill Castilla, she is president and CEO of Citizens Bank of Edmond, joining us here in our Bloomberg Interactive Broker studio.
We are just over 40 minutes away from the market close. The S&P 500 off its best levels of the day, but still up 0.4%. A reminder that if it does close at a record, it'll be the 20th record for the S&P 500 so far this year.
All right, everybody, this is Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 outperforming very much in the green today. S&P post-Fed up 21, 52.45 right now, up 0.4%. Dow Industrials up 297, a gain there of 0.75%. NASDAQ is up 51 points right now, higher by 0.3%. Stocks powering ahead on up optimism that the Federal Reserve will be able to engineer a soft landing, which would bolster the outlook for corporate earnings. 10-year yield 4.27% with a 2-year 4.63%. Spot gold down 0.2%, 21.81 the ounce, while West Texas Intermediate crude is down 0.3%, 81.04 a barrel. Bitcoin now down 2.9%, 65,140 on Bitcoin. Well, as for the overall economic outlook, specifically the growth outlook, Stephanie Roth is chief economist at Wolf Research.
We're at 2.4% for this year, and we've been expecting 3 cuts, so for us, we haven't had to change it. That said, from where we were 6 months ago before Powell pivoted, we were looking at a 1.5% GDP growth. So we kind of made that similar type of adjustment in anticipation of the Fed being able to be dovish for longer, partially because our expectation is inflation should come back down towards 2% with growth still being okay.
Stephanie Roth of Wolf Research. First day out for Reddit, and the stock now up by 44%. Reddit priced its IPO at $34 a share. Right now we have Reddit at $49.09. Again, stocks trading higher across the board except for Apple. Apple shares are dropping today. We've got Apple down now by 4.2%. This after the U.S. Justice Department and 16 attorneys general sued Apple, accusing the iPhone maker of violating antitrust laws. Apple, for its part, says the lawsuit is wrong on the facts and the law. Again, recapping, S&P up 20, up 0.4. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been certainly keeping an eye on shares of Micron Technology. In fact, you just asked me, hey, is this one of your gainers today? I'm like,
it
yes,
better be one of your gainers. I mean, I'm struggling I found decliners, but it was kind of a struggle. You have so many gainers to choose from.
It was so easy, and I had them even before the open. I knew it was going to be Micron.
Before the open?
I knew it was going to be yesterday's IPO, and I knew it was going to be
lucky.
Reddit. It was like kind of crazy. Anyway, Micron surging up nearly 18% at its highs today, hitting a record high. Still up. It's a little bit off that best level of the day, but it's still up more than 14%, almost 15%.
If it closes up here, it'll still be at a record.
Yeah.
It'll still close at a record.
No, good point. And it all had to do with what we got after the close yesterday, Tim.
Yeah, for more on that, let's bring in Jackie Davalos, Bloomberg News technology reporter. She joins us from our Washington, D.C. bureau. Jackie, good to have you with us right now. Hey, thank you, AI. Is that the story when it comes to Micron?
You know, it needed a boost after the year it's had last year. And of course, it's the latest tech company to join in the AI boom. And there's good reason for this. Now, Micron is the largest US-based memory chip maker. A lot of people don't know what that is, but what that means in the context of this AI wave is that it's really used in the chips that NVIDIA is producing that are key for a lot of these AI systems to even run. And you saw that in the numbers. Its sales jumped by almost 60%, $5.8 billion in the second quarter, and that outpaced investors' expectations. But what really caught investors' attention was the outlook.
Yeah.
The company is expected to bring in about $6.4 to about $6.8 billion, also ahead of expectations, and that is because it's expecting a lot of demand for what it's calling this high bandwidth memory chip. Again, that's going to go into the latest generation chips that NVIDIA is bringing out, which, as we saw this week, was getting a lot of attention.
And you were being facetious when you said the year that it had last year, right? Because it was up 72% in 2023, right?
Love a little sarcasm.
Okay.
Well, a little bit, but you know,
Not as much as NVIDIA.
It was up 70% last year.
No, but you have to look at what was going on in the inventory glut, kind of that environment that had brought down some of the other chip makers out there as well. When you think about the next generation for chips, it's really going to be AI based, and that is really what the company was reinforcing. You had Sanjay Mehrotra today join Bloomberg Technology, telling Ed Ludlow and Caroline Hyde just how much optimism he is feeling around what AI is going to do for their business. Now, look, from a profit standpoint, they needed it as well. They posted their first profit after almost 5 straight quarters of losses. So this AI boost came at a good time.
No, really significant. And of course, you said Sanjay is the president and CEO of Micron Technology. Yeah, it is interesting, right, Jackie, as I think about how much we talked about AI last year, we are continuing the conversation here in 2024, but it does say, you know, how much we're trying to figure out is euphoria or irrational exuberance, if you will, over AI, and how much is fundamentally supported. And it feels like what we got from Micron, MU, I was saying the ticker, that it does feel like there's that fundamental momentum behind the AI craze.
I mean, this is real. This, Carol, at the end of the day, this is hardware. You can't really get around it in a way that perhaps with software you can perhaps boost the actual appeal it's having to consumers and the traction it's getting with customers actually paying for some of these AI products. That hasn't really materialized to the extent that we've seen it materialize with hardware. Take NVIDIA, obviously, as this AI poster child. If it's going to need a player like Micron, which it name-checked in its conference earlier this week, that means something for the company. It's an actual product that you can see, you can touch, and it's going to go into some of these critical AI systems.
Hey, Jackie, what is it, though, for like a company like Micron Technology, where they're giving an outlook and giving a very upbeat outlook for fiscal third quarter revenue, that says, wait, listen, our runway of what we see in terms of order demand is what, 3 months? Like they feel confident enough about that to put it out? Because that's what I wonder about. Like, we talk about this with AI demand. Like, will it at some point people will be like, I got enough stuff, I can slow down a little bit? So what's the runway that we know that we're getting from Micron Technology? Is it just another quarter, or is it something strong, like longer than that?
We have some pretty long-term guidance. The CEO today said that when it comes to this high bandwidth memory chip, its latest one that it's banking its future on, for 2024, it's sold out. For 2025, it's saying that that supply is allocated. They're in a position where they're basically creating this memory chip that is in short supply. And because of that, they can really charge whatever they want for it. He was really optimistic about what that means for the business. So at this moment, if you have NVIDIA saying, we're just going to keep upgrading our chips, our GPUs, and we're going to need Micron to do that, that says good things about Micron's business and the demand there.
Well, can we just roll on top of this? You know, one of the other companies we've been talking about, Jackie, is Astera Labs. Like, its second day right here in the IPO was up 72% yesterday. It's up another 16% again today. It just seems like, and again, this is one that specifically plays into the artificial intelligence space. I kind of want to remember how it was described.
Okay, so they do semiconductor-based connectivity solutions.
Connectivity. Oh, you know what that is?
Well, but it's like, you know, it helps companies do stuff in the cloud and with AI infrastructure.
Yeah. Well, but it's right.
Yeah.
Right? So that's what it is it's just what? Is it all about just bringing all this information, the machine learning stuff together? This is what it's all about, all these chips.
It makes it run faster. And if there's one thing that the company emphasized after its earnings, it's that energy consumption. When you have kind of memory chips that move a little bit slower, it's going to take a lot more energy to get them going at the speed at which AI systems need. And the next kind of iteration of the conversation goes to, well, are AI systems creating more problems when it comes to things like climate change? That energy consumption is coming under scrutiny. So you have a player like Micron saying, look, we can do it faster and with less energy. So a lot of that value add is coming from that too.
Hey, go back to that slump that the company experienced last year, even though it wasn't necessarily reflected in the equity market. Talk a little bit about what actually happened with inventory and to what extent it is indeed still cyclical, even if there is this AI boost.
Well, there was a lot of overbuying that happened. And after the pandemic kind of, was starting to dissipate, there was an inventory glut. And Micron wasn't the only one that was dealing with this. You had players like Intel also kind of thinking about what they're doing with this extra inventory. Some of that has started to dissipate as you've seen that demand really pick up, but it really does kind of follow the cycles that the broader economy is going through. And when you think about some of that pessimism that was in markets at the time, it's going to eventually kind of smooth out for players like Micron, but a lot lot of it, they feel it pretty substantially. Now, they're not going to be as exposed, which is, I think, is a point that the CEO was trying to make today, because AI is kind of this longer term play, and it kind of diversifies its bets a little bit more. You know, you have different types of memory chips that are going to be in demand, but when you have a customer like NVIDIA, that's pretty promising.
Hey, Jackie, we have 40 seconds left. We'd be remiss if we didn't ask you about Reddit and AI, given that Reddit right now shares, just pulling them up here on the terminal, up 45%. Wow. The company has talked about it licensing its content to train AI models. How are you looking? You know a ton about AI. How are you looking at this?
No, thank you for that. Everyone knows a ton about AI these days. We're all kind of interacting with it, whether we realize it or not.
We're still learning.
You know, Reddit's an interesting one. They have a lot of data out there. They're kind of, I used to think of them as kind of this like fringe social network where you can kind of find, you know, really positive types of comments and then really dark ones. But at the end of the day, a lot of people engage with it from different corners of the tech world. A lot of that data is really valuable to the large language model makers, and it's no surprise that the company has some pretty lucrative deals with players like Google who want to use its data to train its own large language models. It's in a pretty good position to do that. So investors are clearly buying into that today.
Yeah, absolutely. As Tim said, stock's up about 45%, almost 46%, but just trading below $50 a share. All right, Jackie Davalos, thank you so much. Technology reporter at Bloomberg News out there in our D.C. bureau.
Hey, let's stay in Washington, D.C. and get a check on latest world and national news with Amy Morris in the 99.1 Newsroom. Hey, Amy.
Hey, Tim. Congress has released details of a $1.2 trillion deal that'll keep most government agencies open through the end of September. Bloomberg's Laura Davison reports it falls short of the deep spending cuts conservative Republicans had been looking for.
Mike Johnson, who, came in as more of a conservative speaker, is operating as a traditional Republican speaker would, making a deal, taking in consideration from all sides, and knowing he's going to need Democratic votes to pass this. So making sure that Democrats see their own preferences reflected in this bill.
Bloomberg's Laura Davison reports Democrats are claiming victories on increases for child care, low-income schools, and health research. Former President Trump could find a target on his assets if he does not pay the bond to appeal his civil fraud judgment. Bloomberg's Nathan Hager explains from Washington.
New York Attorney General Letitia James has formally registered the $454 million penalty in Westchester County. The filing doesn't give a reason, but Westchester is where two of Trump's most valuable properties reside: the Trump National Golf Club Westchester and the mostly undeveloped Seven Springs estate. James's move could make it easier to seize those assets if Trump doesn't post a 120% bond by Monday. The former president's asking to post no more than $100 million. A ruling on that request could come any time. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Biden administration continues to express concerns that if Israel invades Rafah in the Gaza Strip, it would cause many more civilian casualties at a time when famine and disease are spreading. But it sounds like Israel may invade Rafah regardless of what they hear from the White House next week when Israeli Strategic Affairs Minister Ron Dermer is there. He told a podcast, quote, "We're going to go in and finish this job." Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ all advancing. Russell 2000, the outperformer today, now up by 1.3%. But let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks still in the green, but off their best levels. The Dow is currently up 297 points. S&Ps are higher by 21, while the NASDAQ is up by 0.3%. The U.S. 10-year yield at 4.27%. Gold is down 4, oil trading in the red, and Bitcoin, that's lower by 2.9%. Among the main 11 S&P sectors, leaders were industrials and the financials. Only telecom was in the red, and leaders to the upside in the Dow, Goldman Sachs and Home Depot, while Dow and Apple led to the downside. Note that Apple fell 4% as the DOJ sued Apple in an antitrust case over the iPhone. After earnings, Micron climbed 15% to an all-time high, while Accenture fell 10%. In IPO news, Reddit opened at $47 a share. IPO is priced at $34. And wrapping things up, Nike, FedEx, and Lululemon all report after the bell. Live from the First Word Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, TikTok, just about 18 and a half minutes left in today's trading session. Charlie, of course, breaking down the numbers. We're green across the screen when it comes to the U.S. equity trade, but we're definitely off our best levels of the session here. But you bring up the IPOs, the Reddit IPO, still up about just shy of 50% at $50, almost $51 a share. So really out of the gate, very strong in this first day of trade. And I'm just going to bring up Astera Labs, too, because I just want to go there. It's up about 11% in its second day of trading, that after a gain, Tim, of more than 72% yesterday.
So what's the right, I don't know, train of thought on all this stuff,
Try not
Carol?
to get
This
irrationally
idea.
exuberant here.
That's a word that I think one could use to describe the markets. If we close at a record today on the S&P 500, we'll close for a 20th record.
Pretty remarkable.
For the S&P. Really curious what Cheryl Smith has to say about this. She's economist and portfolio manager at Trillium Asset Management. She joins us from Boston, Massachusetts today. Cheryl, how are you?
I'm great today. How are you doing?
We're doing well. Hey, wondering what you think about the I don't want to say exuberance, but I think it's fair to say that with some of the excitement that we're seeing in the IPO market, how does that look to you?
I think I'd go with the euphoria rather than exuberance, in the sense that we are very long in the tooth for this economic cycle. The equity market wants to believe and wants to believe hard and is looking for every possible sign to go higher. The fact is that we are 24 months into a Fed tightening cycle, and that is about when we normally see interest rate hikes begin to really affect the economy. I think we had a bit of a head fake last year during the regional bank crisis last March. And so everybody thought, oh, it's going to happen now. Oh, it didn't happen. It must not be going to happen. But we're seeing signs of softness in the labor market. We're seeing signs of softness in the credit market. And those are just the kinds of signs what you see in a pre-recession environment is the market goes up and up and up, and then suddenly everyone wakes up and says, "Oh, wait, no, we shouldn't be doing that."
Are you saying that's where we are now?
I'm saying we're not at the drop yet.
Okay.
We're at the party.
But we are but you're saying, I guess we could always say we're pre-recession because there's going to be a recession, but right?
It's true. Just
okay.
How many 10 years in advance, right?
Exactly. So where are we sort of in that cycle right now?
I would say we are seeing a lot of signs of softness in the labor market, and the couple of ticks up we saw in the household employment would indicate that we might fairly rapidly start seeing some declines in employment, and that would pretty quickly feed through to equity market valuations. So I'm thinking that we are 4 to maybe 6 months away from recession.
Wow.
So hang on a second, because Jay Powell, Fed chair, yesterday in his press conference and answering questions from reporters said that the labor market is in good shape. We monitor labor market carefully. I don't see cracks. So when he says something like that, you read that, and I love that you wear two hats, economist and portfolio manager. You got to put it all together, what the economic backdrop is and what does it mean for investing and investors. Having said that, when Jay Powell says that, do you not kind of read like, wait, he feels pretty confident, and maybe not just today, but longer term, or do you read that, well, he doesn't see the cracks right now?
With all due respect to the Fed chair, his job is not to cause the economy to go somewhere bad. So I think until cracks are quite visible, he does not want to be citing them. The cracks I see are, I wouldn't call them cracks, I would call it softness. We see softness in many of the state unemployment figures. We see, very patchy employment, with employment growing in Texas and Florida and some of the more southern states, and employment really not growing much across most of the coasts. We also are seeing, as I mentioned, that difference between the household employment and the new jobs added numbers. And that kind of divergence usually resolves in one direction or another. I'm thinking at 24 months into a credit hiking cycle, we're going to be seeing that market slow down.
Forgive me, because I'm really interested in what you have to say. It just goes counter to so much of what we're hearing from so many of our guests right now. I think it's really interesting. We just spoke to Jill Castilla over at Citizens Bank of Edmond. She's the president and CEO, and she gave us an idea that and look, it's a small bank. It's only in one city, but she has a virtual bank too with about 1,000 customers. And she says essentially right now, for her customer, things have never been better.
And there's a lot of money sloshing around.
I can hear that that's her. I can hear that that's her experience. But I would point out that credit card delinquencies are going up, that auto loan rates for people in lower credit tiers are extremely high, and we're seeing a lot of dislocations in the CLO market. So there's just pockets. It's not widespread distress, but I see enough that concerns me. We want to be positioned, as you mentioned, I'm also a portfolio manager. We want to be positioned in companies with less leverage. We want to be positioned in companies that have a lot of financial cushion. We don't want to be out over the edge of a cresting wave.
So let's talk more about how customers should be positioned right now. Give us some idea of the types of companies, and if you can, the names of companies that people should be in right now.
Sure. Can't do names because compliance, as always. However, what I can talk about is the characteristics, characteristics that we're looking for. We're looking for companies with low leverage, low net debt. We're looking for companies that have a high return on invested capital, good ROA as well as ROE, not so much leverage between those two. We want companies that have a demonstrated ability to generate profit. So I would say in the steadier growth component, not the high growth area, but companies that in good markets and bad are able to do it. We're also looking at companies that are already seeing flows from the Inflation Reduction Act, from the net investment and infrastructure rebuilding. So the companies that are kind of on the front lines of that are companies that we want to be invested in.
Interesting. The IPOs too, tech ones, big ones, in the last 2 days, coming out of the gate very strong. Does that give you, does that say something about the marketplace to you? And just got about 25 seconds. Does that give you some more optimism, perhaps, or no? Just quickly.
Hard to say. They seem a little frothy to me. I'm sorry.
No,
I'm an economist. We're dour. We're
Hey,
gloomy.
you know what? This is what makes a market.
Well, you're an economist and a portfolio manager, so you got to put it all together.
Yeah.
So I appreciate the takeaway. Cheryl Smith, thank you so much. Look forward to next time. Cheryl Smith, economist and portfolio manager at Trillium Asset Management, joining us from Boston, Massachusetts.
In my college economics department, they were called the dismal scientists. Okay.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pettit. We got Reddit right now up by 47%. Reddit shares, though, have eased back from highs after jumping as much as 67% above their initial public offering price. A day after the social media company ended, shareholders raised $748 million. Bloomberg Radio this morning caught up with Chief Operating Officer Jen Wong, and we asked her to reflect on the moment as her company goes public.
You know, it's kind of like a wedding day, I guess. Lots of different emotions, joy, relief, jitters, all of it in one. Jitters, all of it in one. I haven't even processed it, frankly. But it is a special moment. It is one milestone in a history of a 19-year company that I think has a lot of runway.
And again, Reddit priced the IPO at $34 a share. Reddit right now at $49.96. Reddit shares, by the way, trade under the ticker RDDT. The Justice Department and 16 attorneys general are suing Apple, accusing the iPhone maker of violating antitrust laws by blocking rivals from accessing hardware and software features on its popular devices. The suit was filed in New Jersey federal court. Apple shares down 4.2%. It does mark the culmination of a 5-year probe into the world's second most valuable technology company. Apple says the lawsuit is wrong on the facts and the law, and Apple warned that it would set, quote, a dangerous precedent empowering governments to take a heavy hand in designing people's technology, and it vowed to vigorously defend against it. Again, Apple shares right now ahead of the close. We've got Apple lower by 1.4%. And those are some of our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week. We're heading over to our TV colleagues in just a moment to wrap up a day. Charlie, of course, breaking down the numbers there. We've got a rally underway.
We do.
Well, I should say rally. I should just say another record.
I'm throwing a wrench at...
Let me give it a little bit of, yeah.
I'm throwing a wrench here.
Throw a wrench.
Okay. The most read in the last 8 hours.
Dun, da, da, da.
Check it out.
It's on Apple, isn't it?
No, it's actually, it's about former President Trump. And some a listener, a viewer, got in touch with me about this story just earlier this last hour, I guess.
Initials or,
Yeah, he knows who he is. He gets in touch with us all the time. He's listening right now.
We appreciate that you watch.
New York State's $454 million judgment against Donald Trump in a civil fraud lawsuit was formally registered in Westchester County, just outside of Manhattan. Carol, this is a sign that his properties in the area may be at risk of being seized if the former president fails to post an appeal bond.
Yeah, our Balance of Power team, I believe, was on this story. But yeah, New York Attorney General Letitia James registering the judgment on March 6th, according to the Westchester County Clerk's online database. The filing didn't give a reason for the registration or identify any Trump assets, but it will allow James to more easily secure a lien should she decide to do so on 2 of the real estate mogul's most valuable properties. So we're talking about the Trump National Golf Club in Westchester and the mostly undeveloped 212-acre Seven Springs estate.
James has said that she's prepared to start seizing Trump assets if he misses a March 25th deadline to post a bond for 120% of the judgment, to put it on hold while he appeals. She hasn't started her process, and the registration in Westchester County doesn't automatically mean she will attempt to seize the properties. Nevertheless, though, it's a clear sign that they are at risk.
Right, and that she may be moving towards, the possibility or an option to be able to do so. Trump, as you know, campaigning a return to the White House in the November election, has asked a New York appeals court to waive the bond while he challenges the verdict or allow him to post a smaller one for $100 million. A ruling on that request, which James opposes, the New York Attorney General Letitia James opposes, could come, though, at any time. It's one of those other things we've kind of had on our radar today. I know you talked about it before we came into the studio.
Yeah, certainly one to watch, especially as that March 25th deadline approaches. The state wouldn't need to register the judgment, Carol, in New York County to kickstart lien procedures in Manhattan, because that's where the verdict was handed down. Trump's properties on the island include Trump Tower and his 40 Wall Street skyscraper.
All right, folks, stick around, though. More on that. But right now, over to our TV colleagues. That's because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Alex Steele with you, counting you down to the closing bell. And we're bringing in our colleagues from radio right now, Carol Messer and Tim Stenivek, saying hello to everyone across Bloomberg Television, Bloomberg Radio, and our YouTube audiences. Soft landing hopes spring eternal, Carol.
Well said, well said. I keep looking and I'm thinking, what? Record on the S&P, could be a record on the NASDAQ 100. We have 2 tech IPOs, one yesterday. It's continuing to gain today. Of course, the Reddit IPO up almost 50% as we speak. I'm like, wait, is this 1999? Like, what time is this? Like, it just feels like we were just talking with a guest who kind of was like throwing water on the fire and saying, wait, slow down a little bit. It takes a while for all that Fed interest rate increase increases to kind of kick in, and we're getting to that environment.
That was Cheryl Smith. She's over at Trillium Asset Management. She's an economist and portfolio manager, Alex, and she is a little concerned right now. She says we're 4 to 6 months away from a recession. She started to see softness when it comes to many of the state employee figures. Credit card delinquencies are, are going up. And she says it's always like this just before there's a recession. And it's a really contrarian view that we're hearing right now from her, because it goes against everything that we've heard from so many other participants and market watchers.
Which it just feels like then we're just in a bifurcated sort of world, right? That if you have your money invested in money market accounts, like Scarlett and I were just talking about, you're making a nice return. Maybe you're doing okay. If you're in the equity market, you're doing okay. But I think Larry Summers and had a paper out with some colleagues that talked about the fact that if you factor in debt in addition to mortgage payments and debt payments, you're actually looking at a lot more stress on the market and individuals than would be implied by just straight up inflationary numbers. All right, there are the closing bells. I think we're at a record. I'm going to try and do this real fast, but it seems like we're at a record for the S&P, right? And we're at a record for the equal weighted index as well. The NASDAQ 100 at a record. Here we go, guys, though, record after record.
Yeah, exactly, right? I mean, it just makes you look. I mean, we're looking at what, about a 27% jump in the S&P 500 since that late October level. So we have seen quite a run up. S&P 500, folks, let me just dig a little bit deeper. We've got 379 names to the upside, so a lot of names gaining in today's session. 123 to the downside, Scarlett, and 1 unchanged.
And a very broad advance as well. You look at the IMAP, which of course breaks down the S&P 500 into 11 sectors. Industrials, financials, energy, those are your best performers, but you've got 9 out of 11 groups in the green. The laggards here are utilities and communication services, but industrials take the lead here, up almost 1% on the day.
All right, guys, let me get to some of the individual gainers, if I may. Micron on that list, closing at a record high today, up 14% here. Largest U.S. maker of computer memory chips, soaring today. We know we broke it down yesterday after the close when it gave its quarterly update and outlook. It gave a surprisingly strong revenue forecast for the current quarter, buoyed by demand for artificial intelligence hardware. So this one, definitely an outperformer.
You called it, Carol. You called it yesterday.
Do you know, I actually, yeah, it was on my list. I put it on there.
She did her gainers before the market even opened this morning. She told me. That's a little secret to Carol Masser.
But I mean, it worked.
She was
it
Reddit.
worked. All right. So Reddit is on my gainer list today. Of course, we've all been talking about it. IPO today at its highs, up as much as 70%, finishing the day with about a 48% gain, $50.44 a share. Remember, it IPO'd, at 34 a share, which was the high end of the range, and popping in a big way today. I wanted to check just real quickly what the market valuation, market cap, over $8 billion, according to the Bloomberg terminal. And then let's go to the IPO yesterday, talking about Astera Labs. This one, which gained over 70% yesterday, soaring again in today's session, up about 3%. Actually, it was up much more earlier in the day. So, yeah, a little bit of a pop, but nonetheless, gaining again for a second day. Semiconductor connectivity company geared to enabling what is called mainstreaming of AI and machine learning in the cloud. So nonetheless, that one continuing to gain ground in its second day of trading as a publicly held company.
Okay, so Carol does the gainers before the market even opens.
I had the easy.
I'm at 355 frantically finding the companies that actually moved lower. There were a few actually prominent ones. We got to start with Apple because shares of the company fell more than 4%. It's actually its biggest drop going all the way back to August. Raised about $114 billion in market cap today. Year to date, Apple shares are down 11%. Regulators on both sides of the Atlantic are taking a look at Apple right now, and that's got investors worried. Here in the U.S., the Justice Department and 16 attorneys general are suing Apple for violating antitrust laws. We spoke to Jen Rhee over at Bloomberg Intelligence, who said this could be a years-long process. In Europe, the company is said to be facing probes about whether it's complying with the Digital Markets Act. So some regulatory concerns on both sides of the Atlantic for Apple. Shares down 4.13% today. And now check out what Accenture said about IT spend this year that had shares moving lower. Shares fell 9.3%. It fell as much as 10%, its biggest intraday drop in more than a decade. You have to go back to June of 2013 to find that. Accenture cut the top end of its adjusted earnings per share guidance for the full year. It missed the average analyst estimates, and the company, which of course does consulting services for IT and tech, warned that it's seen financial services customers pull back their spending when it comes to software. And then Chewy, this company reported after the bell yesterday, shares fell earlier in the session and ended up finishing down more than 10% on the day. It did post net sales guidance for the first quarter that didn't meet consensus estimates. The online pet retailer beat consensus on fourth quarter net sales and adjusted EBITDA. Analysts, though, flagged a sequential decline in active customers during that period. Citi did say the results were good, but not great.
They
Nonetheless,
need more
shares
20%
down.
off coupons.
You think so?
That's the
Yeah, their
solution.
margins must love that.
Their customers love that.
Yeah, that's fair.
That doesn't always work out for the companies, right?
Yeah.
With those discounts.
Yeah. See, you could have done that yesterday, Tim. Maybe you're just, you're not thinking
I couldn't have
ahead.
done Apple.
That's true. That's true.
Okay,
All right.
to be fair.
I'm taking a look at the bond market here, guys. So you're looking at more action in the front end. You're having a little bit of a sell-off there. You have yields up by about 4 basis points, reversing some of the gains that we saw yesterday in the market. Also, just on the macro, bent here, the BOE laying the groundwork for a cut. No one wanted a hike this time round. The S&B wound up cutting rates. So just all across, it feels like, S&B beat the Fed to it, right? So in some ways, it's no surprise that you see higher yields on the front end.
All right, folks, a few more earnings still crossing as we are almost really done with earnings season, but Lululemon crossing. Let's go to the numbers. Fourth quarter EPS, $5.29 a share. Also looking at fourth quarter net revenue of $3.21 billion. Slight beat, guys. The estimate is $3.19 billion. More importantly, let's go to the outlook. First quarter EPS of $2.35 to $2.40. Looking for some comparison here. And also says it sees first quarter net revenue of $2.18 billion to $2.2 billion. The estimate on the street was $2.26 billion. No surprise to see the stock tanking in the aftermarket. Right now down about 7% here. The stock is down 6% though in 2024. But again, a drop of about 9% in the after hours.
Yeah, the first quarter revenue is what is coming in light. Analysts were looking for $2.26 billion for the first quarter revenue. Lululemon sees it at most at $2.2 billion. And the first quarter EPS of $2.35 to $2.40. Analysts were looking for $2.55. Are there discounts taking place at Lululemon? Because I go in there a lot and there are not.
I never do discounts.
I know.
That's why I
never
don't
see
shop
anything on the
there.
sales rack.
Yeah.
So,
I'm not seeing a lot in terms of actual color coming from the CEO or CFO in the press release. We'll have to wait to the call to get more. I did see from Megan Frank, the chief financial officer, said that looking ahead, they're going to stay focused on driving the business forward for the near and long term while operating with agility and discipline. She did say that we're still early in our growth strategy and excited for what the future holds.
Yeah, I agree with you. I was reading through the press release also. It just seemed very vague
Yeah.
on that front. One more headline here. Lululemon sees their full year guide does not see share buybacks. And remember, it was that net revenue for the first quarter on the high end that kind of fell short of estimates on that.
Yeah, Calvin McDonald, the chief executive officer in the press release too. I feel like this is interesting when they're talking about kind of opportunities. We are focused on significant opportunities ahead for Lululemon as we navigate the dynamic retail environment. And I feel like when somebody says dynamic retail environment, I'm like, how do you read that? Is it difficult? Is it good for you? Is it not?
It has to be volatile. It's volatile.
It's changing,
Yeah.
and we're not sure where we fit into that change.
Exactly how I read it.
They do have a history of these successful activations in store, right? The idea of offering something in a store that you can't get by ordering online, like yoga classes and other fitness things. And I'm wondering what the appetite is for that right now.
Maybe we all have enough yoga pants. All I know is I agree with you. They're never on sale or there's a little sale rack, and it's not inexpensive, right? It's not inexpensive.
Yeah, $100 yoga pants, everyone.
No thanks for something I sweat in. Not happening.
All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We'll see you again for the Friday edition of Beyond the Bell. Yahoo! We'll see you same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. As you know, just quick headline, FedEx just crossing the Bloomberg terminal.
Another one, Carol?
The earnings are not quite done yet. Third quarter adjusted EPS, $3.86 a share, folks. That's 40 cents better than what the street was forecasting. Third quarter revenue, it's a little bit of a miss, $21.7 billion. The estimate on the street is $22.05. Fiscal year adjusted EPS, $17.25 a share to $18.25. It had seen $17 to $18 and $18.50. So it's kind of adjusting the range there a little bit.
The company also, and perhaps this is why shares are so high, authorizing a new $5 billion share repurchase program. Shares higher by about 7% after this release came out.
Yeah, buyback seems to be what everybody's doing. It added 500 million share repurchase in fourth quarter too, but as you said, authorized a new $5 billion share buyback plan. So certainly getting investors' attention.
Continuing to move higher, Carol.
Yeah, well, that's what happens when you do a buyback.
Yeah, wow. But I mean, like, you know, they were up 7%. Now they're up 9.3%.
Yeah, it is interesting to see it. Yeah, and it kind of overshadows, I feel like, anything else. We'll look for some, though, color in terms of the business because FedEx, like UPS, always a good indicator of what's going on in the U.S. economy as well as globally.
Hey, we mentioned the S&P 500 just notched its 20th record close this year. The NASDAQ 100 closed at a record. The Dow Jones Industrial Average closed at a record. This relentless rally in stocks powering ahead on optimism that the Fed is going to be able to engineer a soft landing. That would bolster the outlook for corporate earnings, of course. Let's see what Doug Sioka has to say about all this. He's a CEO and partner at Kavar Capital Partners. He joins us once again from Leawood, Kansas. Doug, how are you? It's good to see you.
Great. Good afternoon. Great to see and hear you both. Thank you.
Well, thanks for coming back on with us. How are you watching this from your perch over at Kavar?
Yeah, I mean, just kind of frenetic couple of days, right, with Powell yesterday, and hard to think he could have been more dovish. I mean, open to the possibility of cutting rates before inflation hits their stated and restated target of both CPI and PCE, and I feel like it was such a great constructive message, right? It puts them in a position where, yeah, we may still cut, but it'll be for the sake of preserving the recovery as opposed to rescuing the economy. And I think that was obviously the market took that to heart, saw both the bond and the stock rally. And then, like you guys were just talking about, I mean, it was some of the earnings strength that's been demonstrated, not just from technology in the Mag 5, 6, or 7, where they are now, but just across different industry groups. I think that's just kind of bolstered people's enthusiasm that we're seeing a multiple that had expanded, but now maybe can be sustained.
Well, it's interesting, too. Like, I don't know, how did you kind of get your head around, right, the Fed upping growth projections, but also upping kind of inflationary expectations?
Yeah, with very little expectation of an increased unemployment rate, right?
Yeah.
I think in some ways we squared that with good news is good news, right? And whether it's soft or no or whatever type of descriptive landing we may or may not have, I think what the Fed is trying to do is invoke stability. And they've been criticized over time, and likely deservedly so, of lacking any foresight and preemptive capability with what they're doing with monetary policy. And I think that could end up being the legacy of Powell, that he is trying to go counter to what has become the expectation and be a little bit more clear in his identification of what is one of his, maybe the third but unstated mandate, which is economic stability. And I think the market plays such a big part of that.
It's so interesting because he spent so much time yesterday at the beginning and at the end reminding everybody what the dual mandate was. And he does this each and every time, Doug. He says, we take our dual mandate very, very seriously. He's just really pounding it into everybody's head. All that being said, how successful of a job do you think he's doing?
Oh, I'd grade it very highly, Tim. And the thing is, like, we have the benefit of Monday morning quarterbacking, right? And I was very critical of Powell in 2022, thinking, like, why does he feel like he needs to do what he's doing? I still remember when Jim Bullard even made a comment like, hey, we may raise rates by 0.75%. We've done it in the past and the world didn't end. Like, geez, if that's your reference point of setting that low bar, and then they do it 4 consecutive times, you kind of felt like, what was your hurry? But I think in recognition of their misunderstanding of the non-transitory nature of the inflationary impact, they felt the catch-up they needed to do they needed to do the catch up that they did, and I would say it's been arguably pretty effective from that point forward.
Hey, Doug, we're just getting a few, earnings trickling out as we're pretty much done. We're waiting on Nike, and we'll break them as soon as they cross. But we just did, FedEx, which we're seeing this stock rally big time, up about 11% here in the aftermarket. As Tim rightly pointed out, they're authorizing a new $5 billion share buyback program. When companies are continuing to spend on buybacks, how do you read that as an investor? Is that really, I get why the stock goes up, right? You buy back shares. I get the math, the supply that's out there and what that means earnings per share. But as an investor, does that make FedEx more interesting to you because of that? Or do you question, all right, is that really, if they think that's the best use of $5 billion versus something else, I don't know. How do you read that as an investor?
Yeah, it's funny, Carol, because I'll answer the question in sort of the context of sort of the opposite perspective. When insiders sell stock, right, we always say there are a lot of reasons that they do that. But one of them is not because they think the stock is going to go on some parabolic rip higher. When companies buy their stock back, there are a lot of reasons to do that. There's financial engineering, to your point, on a metric per share basis. It improves the valuation, but they're not doing it because they think the stock is overvalued. So I do think it is a nice signal to Wall Street and to the investor community that they still think there are better days in front of the company, and that's a good use of the free cash flow that they're generating.
There's something else you mentioned, though, just now, Doug, and that's the idea of executives selling shares. And we've seen a lot of executives lately sell shares. We're getting Nike earnings right now, so I do want to just jump in with some numbers. Third quarter revenue for Nike did meet estimates. Third quarter revenue coming in at $12.43 billion, estimates for $12.31 billion. Inventory coming in lighter than estimated at $7.73 billion. Estimates were for $8.16 billion. Gross margin coming in just shy of estimates too, Carol. 44.8%. Estimates were 45.1%. And then earnings per share coming in shy of estimates at 77 cents versus 79 cents.
Yeah, we're looking at Nike shares up almost 5% here in the after hours. That third quarter revenue number, folks, it's a beat, $12.43 billion, as Tim mentioned, estimate $12.31 billion. And what's interesting is the gross China, or China revenue in particular, and that came in just a hair above the forecast at $2.08 billion versus $2.04 billion. A very important market. We track it. We talk about it a lot. So interesting to see that number come in and important. But right now, I got to say, actually, Nike bouncing around. It was rallying in the after hours. We're now down about 1%. The inventory number, 7.73 versus an estimate of 8.16. So continue to kind of go through those numbers.
Some interesting commentary from John Donahoe, the president and CEO of Nike, who says, quote, "We're making the necessary adjustments to drive Nike's next chapter of growth. We're encouraged by the progress we've seen as we build a multi-year cycle of new innovation, sharpen our brand storytelling, and work with our wholesale partners to elevate and grow the marketplace."
All right, right now, folks, Nike shares down just about 1% here. It's bouncing around here, but down about 1% here in the aftermarket. Hey, just to wrap up, I want to go back to you, Doug Kavar, of course, still with us. Hey, Doug, Doug Sioka. Sorry about that. Although it's a name in the family, I know I can do that.
That's right. Prominent one.
Just thinking of mom. Hey, listen, so how are you thinking about, we just had a guest, Cheryl Smith, who said, hey, listen, don't forget recessions start 23 months after interest rate hikes begin. The range is from 15 to 36 months. We're now at 24 months. Do you think about that maybe we've got to see some kind of correction, or that we are maybe at some point going to hit that recession, maybe sooner rather than later?
It's a very natural part of the business cycle, obviously. For us, it's difficult to anticipate or predict a specific time, only in so much as we have such strong underlying economic growth right now. And I think if you pair that economic growth with companies in a very interesting part of their upswing of their profit cycle, plus a labor market that's finally in balance, and think about it too, like the breadth that we've seen in the contribution to the index performance has been really huge. And you guys mentioned regarding Nike, incorporating like EM, like China, which is a huge market. And in light of like everything that happened with Apple Computer today, where's Tim Cook? He's in China. right? Opening the second largest Apple store in the world after the one on Fifth Avenue, right? This is a market that has actually been discounted in its contributions to American consumer products and technological goods. If that comes in, I think it actually forestalls that recessionary influence even more.
It's a really good point. We talk about that too, that despite all the pushback, or at least the tensions between the U.S. and China specifically, you're not seeing executives run away from China. All right, Doug Sioka, thank you so much. Great to check in with you. Chief Executive Officer, partner as well at Kavar Capital Partners, roughly about $1.25 billion in assets under management, joining us from Leawood, Kansas. Nike shares now back up, Tim, up about 4% here.
Yeah, third quarter revenue coming in above estimates at $12.43 billion. Third quarter inventory coming in shy of estimates at $7.73 billion. Also coming in shy of estimates is third quarter gross margin. 44.8% estimates were for 45.1%. And then Greater China revenue coming in above estimates at $2.08 billion versus estimates of $2.04 billion. One more there for you, Carol.
Yeah,
earnings per share coming in at 70 cents per share. That is shy about 2 cents of the 79 cents.
All right, a lot of numbers.
That was year over year, I should say.
You know who makes sense of all these numbers for us?
I do. We have a brilliant team over at Bloomberg Intelligence.
Yeah, and right now joining us is the BI Senior Analyst for E-commerce, Athleisure, Off-Price Retail, Poonam Goyal, joining us from New Jersey. Hey, so Poonam, stock's been bouncing around. It rallied, then it went lower. It's right now up about 3%, forgive me, 3% Nike shares. What jumps out here for this quarter? Is it a good one?
It's a good one. It's a good one because North America sales are up 3%. And I think that's really impressive here because none of us probably expected North America to turn so sharply. In fact, everything that we've been hearing in the retail space, especially from even rivals Adidas, Puma, who reported earlier, was that North America was still a challenged market. So to see this growth, I think, is what has investors be optimistic because it truly, I wouldn't have expected this going into the quarter.
Yeah, I'm going to just rehash North American revenue, $5.07 billion. That's up 3.2% year over year. The estimate was $4.82 billion. That is a pretty hearty beat. Greater China revenue, we always go to China. This came in, Poonam, at $2.08 billion, up 4.5% year over year. Estimate was $2.04 billion. Who says Chinese consumers aren't shopping? But put this number in context because you have watched it for a long time.
So the number that you just reported was the reported number, but in constant currency, sales in China were actually up 6%, and they were a little shy of consensus, which was looking for 6.4%. So I'd say on an apples-to-apples basis, looking at the underlying strength in the economy, it was a tad bit weaker. So I would still remain guarded on what happens in China. We heard from our colleagues in Europe who covered the luxury space, with Gucci reporting earlier, that there are some headwinds that we need to watch for in China. So I'm still on the sidelines when it comes to China, but really particularly impressed with the North American numbers here again.
It's so interesting that you say that because I pull up FAGO on the Bloomberg terminal, and I see that Greater China back in 2021 accounted for 18.6% of Nike's sales. Then in 22, it was down to 16.2%. Then in 23, down to 14.2%. Over that period of time, North American revenue has increased. What should we think about as sort of the share? Like, where are we going to see the growth, Poonam, geographically for Nike?
I think the longer-term growth story is still intact, and China remains a key growth engine. The period that you were just discussing is a lot influenced by the pandemic, so I don't think it's the norm to look at. I do think there's a lot of growth available to Nike and all the athleisure brands in China. So it's still a growth story in the long run. In the near term, though, we will have challenges, or at least that's what we're seeing. And I wouldn't be surprised if China at some point would be 20% of sales again or near that.
Hey, there was another story unrelated to earnings, but Nike replacing Adidas, as the main uniform sponsor of Germany's national football team. So taking the competition for marketing primacy in the sport onto its arch rival's home turf. So it's just, we see this go back and forth, right? They're all competing to have their name and outfit, various sports teams around the world. How important are these sports partnerships, Poonam, in terms of kind of, fueling consumer sales ultimately? How important are things like this?
They're very important, especially in the sports world. So Nike has actually, over the past few years, taken a lot of sponsorships from Adidas. We did expect that to change a little with the new CEO in place at Adidas, and they are winning back some teams. But the fact that Nike is able to take over the German soccer team or the German team, I should say, is impressive because we know Nike dominates in basketball, but to be able to take share in sports that it's really not a dominant force in is only going to help it attract more share because the sports teams matter.
Right.
They are endorsers for the brand.
Hey, Poonam, before we let you go, we got to talk about Lululemon. Shares down more than 9%. The company offered a lower than expected sales outlook for the first quarter and the full year. The company sees net revenue in the range of $10.7 to $10.8 billion. What are your initial thoughts with what's going on at Lululemon and why the decline today?
So the decline is all in the guidance, as you said. But if you think about how Lululemon typically guides, anytime they're very conservative. I wouldn't be surprised that they're conservative again. They're known to set the bar low and beat it. And 4Q results were good. So if that has any proof on what's happening at the brand, I think the brand still has momentum. They'll continue to execute against their Power of 3x2 strategy. These guidance numbers, we think, could prove to be conservative as the year unfolds.
All right, interesting stuff. Hey, listen, we so appreciate it. As always, Poonam Goyal, she is Senior Analyst for E-commerce, Athleisure, Off-Price Retail at Bloomberg Intelligence, joining us there from New Jersey. All right, let's get a reminder of how we wrapped up on this Thursday trading session and some of the news after the bell. Let's head on over once again to Charlie Pellet.
Much indeed. An update today for the Dow, the S&P, NASDAQ Composite Index all moved higher, not just advancing today, but also the 20th record of the year for the S&P 500 Index. More on the numbers in just a moment. Do want to continue with earnings because we had another major beat after the close of trading. FedEx out with adjusted EPS for the third quarter that did beat the average analyst estimate. After ours, we got FedEx shares surging by 10%. Nike, a company Poonam was just talking about, Nike after earnings. We do have Nike up now by 2%. Third quarter revenue, $12.43 billion, estimates there, $12.31 billion. And Lululemon Athletica plunging after ours, down 9%. Lulu offering a lower than expected sales outlook for the first quarter and full year, driving shares down in extended trading. Again, after ours, we got Lululemon down now by just about 9%. An update on Wall Street. The Dow, the S&P, NASDAQ all advancing today. The S&P 500 Index up 16, up 0.3%. Dow Industrials up 269, up 0.7%. NASDAQ up 32, a gain there of just about 0.2%. 10-year 4.26%, the 2-year 4.64%, and spot gold today. We did have gold lower, a little change, down 0.2%. West Texas Intermediate down 0.5, and Bitcoin down today by 2.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Carol, we've all been there. A moment where you want to say something, where you want to speak up, where you want to be heard, but instead, for a whole host of reasons, you just stay quiet.
I did it for a long time. I was so quiet and so actually shy, if you will. Hard to believe.
I wasn't going to say anything.
It's okay.
You said it yourself.
I did.
It turns out, though, that keeping quiet in those moments can, according to our next guest, really hold us back in life. I'm not just talking personally, but also professionally, too.
Interesting. All right. Elaine Lynn Herring is a lecturer at Harvard Law School. She's worked with corporations, government organizations, NGOs, including American Express, Google, Nike, Pixar, the Red Cross, and many more. Tim, has a new book out.
Yeah, it's called Unlearning Silence, How to Speak Your Mind, Unleash Talent, and Live More Fully. She joins us from the San Francisco Bay Area. It's good to have you with us, Elaine. How are you?
I'm good, and I'm so glad to hear that Carol's already spilling the tea about her life.
I know. Well, you do that a lot in your book, actually. You open with a scene from earlier in your career about not actually taking credit or somebody else taking credit for work that you've done. Can you talk a little bit about that?
Absolutely. It is a dynamic that, as I have worked with clients across industries, across continents, seems to happen all too often. You have done all the work, then someone else gets the credit. And to say something, to say, hey, that was me, seems petty. And it really gets at the core of how do we speak up? How do we get seen? How do we get what we need at work and at home?
Wait, can I counter, though? Because that happens a lot in a work scene where just somebody did something, but they don't get the credit, and how much
Hello,
of it?
To the producers of our show,
But I mean,
who literally do so much.
Exactly. when is it petty, or when is it like, no, I should speak up? Because it comes up so often, and I think it's fair to say that a lot of people, you just kind of turn and look the other direction. But so what's the right balance here? When do you really speak up? When should you be like, no? And where's your colleagues of saying, no, wait, this person really did it?
Yes, and I love that Tim is already starting to speak up on behalf of producers at this show. Because to the question of when should you speak up, my argument is you should speak up if it is what you want to do, if you have that agency to do it. The difference between silence that is additive or silence that is damaging is when it feels like you can't do it because the costs are too high. And yet we all know, in terms of promotion, in terms of merit increases, getting credit for the work that you've done does matter.
So how early is too early to start talking about this stuff? And the reason I ask is because I actually had a parent-teacher conference yesterday on Zoom.
Love it.
With my son's pre-K teacher. So he's 5, he's in pre-K before kindergarten. And this was the big area for improvement that she wanted him to work on.
To speak up?
To speak up,
Interesting.
especially when he's in groups of people, more so than just with his, his best friend.
Yeah.
And she's noticed it when they're literally they're playing at school. That's what they do. And I asked her, what are the tools that you have to teach a kid that young to do those things? So I'm going to use my time with you, Elaine, to get that advice.
I love that this is a real intervention. And I'd also argue that speaking up, contrary to what your son's pre-K teacher might be saying, doesn't always have to come in the form of words. The real question about using your voice is, are you getting what you need? Is your son getting the attention that he needs? Is he getting the care and the development that he needs? And how do we each flex and develop different skills that we might need? So I'd be curious, to the extent that a 5-year-old can articulate, are they getting what they need in that classroom?
So you need to talk to Arlo then?
Yeah, it was he just he wasn't playing with the magnetiles the same way that the other kids were. So that's where it comes from.
All I know is you share with me things he says. He's a super smart kid and very observant.
We're very lucky.
Well, because there is something to I mentioned I was very shy as a kid, and I know it's really hard to believe that probably today, but I was painfully shy. But I have a lot of older siblings, and one of my older sisters says, what you do is you observe a lot, and then you're sometimes slow to the party, but when you do, you kind of hit it hard. And so I again, that balance of observing and learning, being the squeaky wheel. Some squeaky wheels do really well. Some you hear managers be like, they're annoying. What are all these balances?
Yeah, and my call to action, my invitation in the book is really for each of us to examine in what ways might we have internalized and learned silence for ourselves. So we're not asking and advocating for how I want to play with magnetiles, and that should be just fine for me to play with the magnetiles the way I want to. And because our lives all intersect with each other, in what ways might we be silencing our colleagues? Might we be not creating the space for their ideas, their genius to come forth? It really is looking at it from all angles.
Elaine, we only have a minute left, and I'm interested to know why, for so many adults, it's so hard for them in the workplace to ask for what they want.
Yeah, my answer is we've all learned to be silent, and at work we've often been rewarded for it, right? Don't rock the boat, keep the peace, be a good team player. And the traditional advice around speak up is just speak up, just do it. We were just talking about Nike, let's take a line from them. But having taught leadership development around the world, really noticed this pattern of, despite those tools and frameworks to negotiate, have difficult conversations and give and receive feedback, some people still don't. So if we really want to speak up and create spaces on our teams for people to do so, we need to solve for silence.
I feel like we're all going to go home and do a little bit of work. You're going to go home to Arlo and you'd be like, hey, what do you need? What do you need in that classroom?
He's well taken care of.
Elaine, this is fun. You can send us both bills because you've definitely helped us. Elaine Lynn
You're
Herring,
welcome.
Be well. Elaine Lynn Herring is a lecturer at Harvard Law School, and she's got a new book out. It is called Unlearning Silence, How to Speak Your Mind, Unleash Talent, and Live More Fully. Joining us there from the San Francisco Bay Area.
Hey, let's get a check on the latest latest world and national news. For that, we go to Washington, D.C., where we find Amy Morris, who's in the Bloomberg 99.1 newsroom. Amy, take it away.
Explains from Washington.
New York Attorney General Letitia James has formally registered the $454 million penalty in Westchester County. The filing doesn't give a reason, but Westchester is where two of Trump's most valuable properties reside: the Trump National Golf Club Westchester and the mostly undeveloped Seven Springs estate. James's move could make it easier to seize those assets if Trump doesn't post a 120% bond by Monday. The former president's asking to post no more than $100 million. A ruling on that request could come any time. In Washington, I'm Nathan Hager, Bloomberg Radio.
Congress has released a deal to keep most government agencies open through the end of September. The deal falls short of the 22% in domestic spending cuts that hardline conservatives had wanted. Now, the deadline's tomorrow, which might not be enough time to get that bill signed into law. There could be a short government shutdown this weekend as the bill heads toward a vote. Secretary of State Antony Blinken spoke in Cairo after meeting with Egypt's foreign minister. He declined to answer how the U.S. would respond if Israeli Prime Minister Benjamin Netanyahu moves forward with the planned military operation in Rafah.
It is possible and indeed necessary to deal with the ongoing threat posed by Hamas, but without a major military operation. That's what we want to discuss with our Israeli counterparts next week.
Blinken is in the region. He's pushing for a deal between Israel and Hamas that would lead to a 6-week ceasefire and an exchange of hostages for Palestinian prisoners. The Secretary of State also expressed more optimism with the ongoing ceasefire negotiations between Israel and Hamas. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
connection lost.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We are keeping an eye on FedEx shares after hours because FedEx reported adjusted EPS for the third quarter that beat the average analyst estimate. After hours, we do have FedEx shares surging by roughly 10%. Also out with earnings, Lululemon. It is lower now. It offered a lower than expected sales outlook for the first quarter and the full year, driving shares down in extended trading. Right now, we have got Lululemon plunging by 10.7%. So also out with earnings, Nike third quarter revenue beat estimates, $12.43 billion. Estimates on Nike were for $12.31 billion. Turned out to be an up day for the Dow, the S&P, and NASDAQ. Not just an up day, but perhaps, and as a matter of fact, definitely also a record today. S&P was up 16 to 52.41. That was a gain there of 0.3%. We had the Dow up 269, up 0.7%. NASDAQ up 32 points, advancing by 0.2%. 10-year 4.26% with a 2-year 4.64%. Spot gold today down $4.50 the ounce to $21.81, down 0.2%. West Texas Intermediate crude down 0.5%. Bitcoin today down 2.5%, 63,355 on Bitcoin. So while it is an update on Wall Street, Cheryl Smith, portfolio manager at Trillium Asset Management, told us right here on Bloomberg Business Week she is concerned about the economy, specifically the labor economy.
I would say we are seeing a lot of signs of softness in the labor market, and the couple of ticks up we saw in the household employment would indicate that we might fairly rapidly start seeing some declines in employment, and that would pretty quickly feed through to equity market valuations. So I'm thinking that we are 4 to maybe 6 months away from recession.
First day out for Reddit, the stock soared 48% above its initial public offering price. Again, recapping an up day, a record-setting day for U.S. stocks. The Dow, the S&P, NASDAQ all higher. S&P now at 52.41, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live in our New York studio here at Bloomberg headquarters in New York City, our Bloomberg Interactive Broker studio. You know where I'd really like to be right now?
Yeah, I do know exactly.
Because it's
maybe,
cold.
Maybe down south, or maybe on the water in a yacht.
Sign me
on a
up.
yacht?
Yes.
On a yacht, yeah.
On a yacht, next to a yacht.
Is that where you want to be?
Yeah, I would like to be there.
Well, I have some good news for you.
Let's go there.
You can go to the Palm Beach International Boat Show because it kicks off today.
It does. It runs through the weekend. And back with us to talk about it and just really talk about the boat business, if you will, is Chuck Cashman. He's Chief Revenue Officer, Executive VP at the publicly held small cap company MarineMax, about a $690 million market cap. He is with us in West Palm Beach, Florida. Florida. Chuck, good to have you back with us. How are you? And talk to us a little bit about kind of your world. Let's just talk the business before we get into the boat show. How's been business?
Well, thank you for having me back.
How's business been? Sorry, that was bad English.
Very good. No, business is still very, very good. You know, we're coming off historically great years, so your benchmark gets a little bit different. But if you look back over the 25 years we've been a public company, this would go down as easily a top 3 year. So business is still very good. It feels a little more pressured, and it is a little more pressured, but nonetheless, transactions are happening, and business is good.
So business is good. We should note, again, it's a publicly traded company. Stock down a little more than 20% so far this year. About 14% of the float is shorted right now. What do you think the market is missing if business is so good right now?
You know, the news isn't always great, you know, and we don't publish when we make a sale, and it's hard to put a metric on customer interest, consumer interest, and the interest is good. Transactions are happening. There's margin pressure. Profitability is a little harder because interest rates are higher, both for the consumer and for us, right? We have a floor plan on $400 or $500 million worth of inventory that kind of eats into profits. And, you know, I think it's always in advance you know, the market and the price of our stock. But I'll tell you, through history, you know, it's always been a mystery to me why we don't get a little more value for what we're able to deliver.
And forgive me, the stock did surge today, up 6%, so down about 18.5% so far this year.
Right.
Yeah.
Yeah. So it's we're all a little disappointed, but you know, we run our business for the long term, and at the end of the day, we do believe that if we just keep doing the right thing the right way, we'll eventually get rewarded for it.
Hey, two other news things just real quickly, and then we'll move on. But you guys did announce earlier this month a $100 million buyback. You also earlier this month reported on a cybersecurity incident. You guys did say it didn't have a material impact on the operations. What do we need to know? First of all, about the cybersecurity incident. Anything more that you know, or in terms of its impact?
No, our release said it all. It was, you know, we're very thankful that we're a tech forward company. We had a good plan in place. It happened 2 Sundays ago in the middle of the night. We were on it first thing Sunday morning. And yes, it was disruptive for sure, but it was monetarily, it just put us a week behind. But I saw a memo come across today that basically said we're back, all systems operational, and you know, you gotta check for fragments of the bad actor that they leave behind, and all that's been cleared, and we've got a blessing of get back to business. So it was disruptive, but not super costly.
And why $100 million buyback? Why do a buyback? Is it just because the stock price has come down, and why not?
It is. Okay. It is. Well, it is, and it shows our confidence in what we're doing, and we believe the stock's of value now.
All right.
So we're gonna buy some back.
Talk to us about. Okay, and I'm assuming you guys are hoping people are buying at the boat show. So talk to us a little bit about what's up for sale. Who do you see as your buyers, or who are predominantly the buyers in this environment?
Well, this show is so unique. You know, Palm Beach is the epicenter of wealth, and you know, we go to a lot of boat shows in a lot of cities, and you know, this is really a top 5 boat show in the world. But really, where this show stands tall is 25 meters and up. So you know, call it 80 feet and up. This is a place where you could come and look at some boats if you're that buyer, and get a good representation of the market without having to travel all over the United States to find these boats. And it's the last show of the show season, and it's a very good environment if you're looking for a big boat.
How big?
Well, if you look at the boat behind me on the picture, that boat was the biggest boat displayed here last year. We met the buyer here, and it closed a month later. So, you know, that's 250 feet.
Okay.
We have 150 foot in the show today. That's one of the biggest boats in the show, and you know, we're looking to meet that buyer.
How much was that boat?
Oh, that boat, I want to say, you know, the final price is always under an NDA because of privacy to the buyer and the seller, but probably $125 million.
Well, and talk to us a little bit about supply and demand. Tell us about whether there's a fair amount of more supply right now or there's more demand in the market. We saw a lot of people buying boats coming out of the pandemic, right? They wanted to get out. They wanted to be away from people. Saw that. What are you seeing today?
Today we're probably at equilibrium. It was clearly a seller's market the last few years. If you had a boat for sale, you were usually, somewhat similar to real estate, kind of parallels that, where you were getting offers at ask, maybe over ask. You would get a couple offers and you would vet to see which offer suited you best. Now inventory's starting to grow. It hasn't grown to the point where it's a disadvantage, but it's a little more of an advantage. If somebody came in today and wanted to buy a boat, we could sell them a boat. They could go boating this summer, where a couple of years ago that wasn't the way. So it's I would say it's equal. It's a little bit of a seller's market, a little bit of a buyer's market. If you have that special boat, which we have some really special boats in our display, the buyer, the seller's got a little advantage because of the special uniqueness of the boat, but the buyer has an advantage because the market is dictating a little more of a concession on price.
We only have about 30 seconds left, but what about chartering right now? Because that's you guys play there too. How's that looking?
Chartering is it's been red hot, and it's kind of in segments. We've expanded in Greece. We're seeing a lot of activity there. We did a recent acquisition, which we've just integrated into our company, and we're in Greece in a bigger way, and we're surprised by the amount of volume, the amount of interest there. Charter in the Med for the summer is the early signs are it's going to be a very, very good season. So yeah, charter is still it's a very good segment, and it's a great portal for people to come in and see if they want to own a boat.
You put your vacation request in for chartering in the yet? No, Carol?
Not yet.
Okay, not yet.
On it. Chuck Cashman, fun to check in with you always. Chief Revenue Officer over at Marine Max and Executive VP.
Today, I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
This is Bloomberg Business Week with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, Tim and I getting ready to wrap up this special 4-hour edition of Bloomberg Business Week.
You know, time flies when you're having fun, Carol.
This was a lot of fun.
It was a lot of fun. The Reddit IPO. So that's why we had our extended hour of Bloomberg Business Week from 1 to 2 today. And indeed, Reddit did start trading during that time. How did it finish today, Carol?
Up 48%, $50.44 a share. So I'm curious what Mr. Krisner has to say about that. He has seen a lot of IPOs in his coverage of the business world, the market world.
It's not too shabby. I mean, 48, I mean, back in the day, I mean, you know, you'd get a triple out of some of these. I mean, but it's respectable given the current climate, and we haven't had that many, right?
Well, but we've had 2 days with 2 tech IPOs, right? The other one being Astera Labs, was it? The chip making, not chip making, but semiconductor connectivity company.
Is everything.
AI, cloud.
Yeah.
Right? Look at the market. The equity market is at record highs. This is a perfect time to go public. Right?
Yes. Well, that's the question. Does it open up an IPO pipeline that has been
Astera Labs.
closed
Make sure I have it right.
For the better part of 18 months?
I don't know. You'd have to talk to an investment banker. I mean, I don't know what kind of the deal flow is. There's been so much emphasis lately on the private markets, and you'd have to talk to the people in the private market to know whether or not they have appetite now.
We're talking to them, too.
Yeah, are you?
Yeah, no, well, wait, sometimes.
Well, we talked to Amy, our IPO reporter, and she hasn't been very active apart from a little bit last fall and over, 3 this year, 3 kind of prominent ones this year. And she was saying that, that's what the market is looking toward right now, is hopefully unfreezing a little bit of a thaw.
Yep. And big deal for Morgan Stanley. They were the lead underwriter on this. It
took them years.
Yeah.
Exactly.
Years.
Yeah. Right. No, exactly. No, I don't know. We're just, we had a market guest on today, and she was interesting. Excuse me. I was just eating a banana. I was a little hungry. 4 hours on air and you get a little hungry. But made the point of, the Fed's aggressive rate increasing cycle or rate hiking cycle, that it takes a while for it to fully hit the market. And she's like, we're kind of there.
You're talking about Cheryl Smith over at Trillium Asset Management.
This is why I love you. You finish my, you complete my sentences, which I really appreciate. No, but it's interesting. Like, I do think about it. That's starting to hit. If we buy what she's saying, she's calling for a recession. She was a little bit more dour. She was a little bit more dour about the outlook here and not getting caught up in some of the IPO exuberance or even the bump up that we've seen. What, a record on the S&P today and a record on the NASDAQ 100.
Yeah, and the Dow too. I think the Dow and the composite NASDAQ comp, I think, was also at an all-time high. That was the case yesterday. So everything was up today. So fresh records, I guess that's the way that we phrase it. Interestingly, Tim Cook is in China, new Apple store in Shanghai.
Doug Sioka mentioned this, yeah.
Right? And there was some interesting testimony today before a House committee. One of the undersecretaries in the Commerce Department was talking about the potential now that the Chinese chip maker SMIC has violated federal law. So the Biden administration may be getting a little bit more aggressive, and I say that only because there are a couple of American business leaders being reported by the Wall Street Journal that will be in China next week. So we know when Xi was meeting with President Biden in San Francisco last November, one of the issues on his list to address was trying to get a little bit more in the way of foreign direct investment. That's been lacking. Clearly, the economy is still stumbling.
Right.
They need the confidence on the part of Western businesses not to overlook what's going on in China. They need, American presence, I'm going to say American firms, to still have a presence in China in a big way. So it'll be very interesting to see what happens, given the fact that there's a lot of tension still around the semiconductor
Tension, but as Doug Sioka, right, he made the point of it's not like all these CEOs are running away from China either.
It's a huge market.
Right. It's not like despite these tensions, right, and we all keep saying like pushing back and everybody bringing everything home, these CEOs are still doing a lot of business in China.
Poonam told us that China's still a growth market for Nike.
How were the Nike figures for Greater China?
For Greater China, they came in above estimates, 2.08 billion versus 2.04
But she also said
billion.
if you bring in, I think, the currency factor, she said that maybe not
Higher,
as
even
impressive.
more. Yeah,
Was it?
no,
I thought
more impressive.
Was
if
it
you
more
bring
impressive?
I think so.
You got to wrap.
Oh, sorry. I hope I'm getting it right.
Questions, go to Bloomberg.com for answers. Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
Down to the wire with a day to go. Lawmakers drop a $1.2 trillion spending bill at 3 o'clock in the morning. Speaker Mike Johnson will have to break the rules to get it passed in time to avoid a shutdown this weekend. We'll talk about it with Maya McGinnis from the Committee for a Responsible Federal Budget.
The Justice Department sues Apple, accusing the company of violating antitrust laws by blocking rivals to create a smartphone monopoly. We'll have the latest.
And No Labels is still looking for a candidate to run against Trump and Biden. The group's founding chairman, Joe Lieberman, the former senator, will be with us. Kaylee, I'm looking forward to that conversation because it's getting hard to find a politician who hasn't said no yet.
Yeah, the list of no's is long. The list of potential members for the ticket seems to be getting shorter and shorter. So certainly we have a lot of questions for the senator, but we also do have questions at this hour as to whether or not we're going to make or miss the deadline midnight tomorrow. We do have the text now, this six appropriation bill package that still needs to pass the House, and they're racing to get it done. We heard from the House Democratic leader Hakeem Jeffries just about an hour ago.
From the very beginning of this Congress, Democrats have repeatedly made clear that we will find bipartisan common ground with our Republican colleagues. We're prepared to do it once again in order to make sure that the final 6 appropriations bills are passed.
Do it once again once, as Count Basie would say. Joining us now, Bloomberg's Dan Flatley and Kate Ackley to cover our top stories. Kate, they'll have to set a land speed record here, at least certainly for Congress to make this happen. More importantly, Speaker Johnson has to forget about the 72-hour rule. How many people on the right will he offend with that?
Well, they're already putting out their statements and saying things on Capitol Hill. They're not happy with either things in this bill, the process of this bill. But as you know, sort of the drive to get out of town, we're on the cusp of a recess. You know, there's a lot of interest in teeing this up for tomorrow and getting out of town.
Well, you talk about how we've heard from a lot of people who are not satisfied with this legislation, perhaps not satisfied with the amount of time they have to read it. It seems both sides are trying to play up wins here, but fundamentally, this looks a lot like the Fiscal Responsibility Act that passed, 10 months ago, right?
It does, and you have people attacking it from both sides, hyping up wins for sure. But at the same time, you have Democrats that are finding things that they don't like, the levels of funding in something. Of course, there's a provision in there that would, I guess, ban flying of LGBTQ pride flags at embassies, U.S. embassies. So that's something that Democrats and, sort of the Democratic base voters don't want to see. There's a lot to like and a lot to not like for both sides in this.
Okay, and considering both sides of Congress, once this gets through the House, how much of a challenge might this be in the Senate? We actually spoke yesterday with Senator Tammy Duckworth, Democrat from Illinois, about that very matter. Here's what she said on Bloomberg.
If that comes to the floor for a vote, and we can pass it in whole without adding any amendments to it, it will pass, and we won't have government shutdown. But if the House attaches any amendments, or we attach any amendments, the whole thing could fall apart, and we would go well into the weekend. The goal is to get this done without shutdown, which means we would need to pass it by midnight on Friday.
The whole thing could still fall apart, says the senator. She mentions amendments. We don't have a timing deal on this yet, right? What's Chuck Schumer in for this weekend?
They're working on
Yeah.
it. I mean, they're working on it. They'd like to have a vote as soon as tomorrow.
Okay.
And again, there you go. There's this, sort of the pressure building.